morning, everybody, and welcome to the Nordic Pavilion here at COP27 and our second day here at COP. And welcome also to all our audience that follow us online. Every morning at the Nordic Pavilion, we take a closer look at the future. How we build, eat, cook, invest, and live if we were to meet the 1.5-degree target. What changes needed to be made, and how will they impact our everyday lives? The future starts with the decision we make today. And this COP is all about implementation and finance. We'll look into how we can accelerate the change with climate finance and market mechanisms. The needed transformation is depending on a change in how we think, create, invest in new projects and change the existing. How can investments from private sector and voluntary compensation accelerate this change? And with us today, we have two representatives from different ways of mobilizing climate finance. Jon Johnsen in Danish, CEO for the pension fund PKA. And we also have Hanna-Mari Ahonen, who is a senior consultant at Perspective Climate Research. I will start with you, Jon, because all sectors need to contribute to the green transition. Also the finance sector. And Jon, we know that you have changed your focus the last couple of years. How can you see the shift towards the green transition in finance?
Well, first of all, thank you for having me today. I think if we look into the way that PKA is looking at the green transformation, it's been a work that we have done for more than a decade now. So 13% of our asset under management is currently invested in the green transformation. It's more than...
I think your microphone went dead.
My microphone went dead?
No, it's working. Just keep it close to your mouth.
Like, no, yeah.
Yeah.
I'll just keep it close to my mouth. So we have now invested $5 billion US dollars in the green transformation, and we are keeping on doing that. So I think that if you look into the Nordic pension funds, they have done a lot of investments currently, and it's been a focus not only for the recent years but for more than a decade. But we need other pension funds in other parts of the world to do the same thing.
When we speak about pension funds, there are a lot of them. Whose money are you using?
I'm not using anybody's money. I'm investing somebody's money. And PKA represent more than 350,000 health and social workers of Denmark. So it's nurses, physiotherapists, bioanalytics, and so on. It's actually predominantly female workers, so it's 93% women. And they have a very strong focus on the pensions that they have invested in, that they will get a good pension when they go on pension, but for sure they also want to do good in the world. So they give me sort of a double target. I have to meet both criterias. So it's very much member driven. They want PKA to do good.
But who's the driver of change here? Is it the pension funds, the clients, or the public sector, or policy support for the green finance sector?
I think it's different for different pension funds. I think it's a mix. So in Denmark, at least, I know that there's a very strong relationship between regulators and the pension funds. The size of pension funds in Denmark are enormous compared to the Danish GDP. So if we work together, public and private, then we will really achieve something. So the public sector or the private sector, the pension funds, has actually agreed to invest more than 350 billion Danish kroners in the green transformation by 2030. So it's a mix. It's more than just the pension fund, the members, or it's a little bit of everything.
All of the above.
All of the elements, yes.
Hanna-Mari Ahonen, you are all about carbon markets, to put it kind of short. But first of all, it's not everybody that knows what carbon market is. Tell us, as short and clear as you may possibly can. I know it's a complex subject.
Thank you for that important question. And it is a complicated question, but in some ways it's also simple. I think the terminology we use is more complicated than the concept behind it. So carbon markets are a way of mobilizing finance. It can be public or private finance. It's about paying for results, and the result is measured in tons of carbon dioxide equivalent. So when you're reducing emissions or then removing carbon from the atmosphere, you are paid per ton afterwards when you've successfully achieved it. So that is the simple idea behind carbon markets, and these tons need to be additional to what would have happened otherwise. And then when you meet other criteria as well, you are certified you get certificates that are called carbon credits. One credit is 1 ton, and you can sell them to buyers, and the buyers can use them for different purposes. And this sale is the source of the finance. So when you've reduced a ton and met the criteria and sell them in the markets, find a buyer, you get a price, but the price can be different. So it's a lively market, but that's the simplest explanation on carbon markets. So that's a different way of getting results-based finance for your project that otherwise would not happen.
Is the complexity of this carbon market, also maybe some of the reason why it's so often portrayed as a negative thing in the media? It's portrayed as rich countries paying for good conscience.
Yeah, I'm an environmental economist, so the idea behind carbon markets was to reward when you do something good. But as we can see in the media, usually it's like buying a good conscience instead of rewarding something good. And there is a lot of complexity. The carbon markets have been developed for 20 years under the UN, but also in other spaces. And we've really worked hard. I've been working for 20 years, and a lot of Nordic actors as well, to make it of high quality. And that creates the complexity. And then if you don't know how the high quality is, we try to ensure it, there is a lack of trust in the system. So the idea is not complex, but ensuring high quality is complex, and it's not perfect, and it's easy to find examples that are not perfect. But we very rarely speak about how we've improved over time, and also that there are also good examples. But it is very hard for someone from the outside to assess it, and we have independent auditors assessing this. But that's where it gets a little distance from the public, I think, when we start going into the process. And there's tens of thousands of projects, so there's good and bad mixed up. And it's very hard for a non-expert to see what's good and what's bad, and it's easy to be suspicious about everything, unfortunately.
You have a huge expertise in this area, so let me ask you, how do you see the carbon market and cooperative approaches for investment in changes and impact?
Well, I've been working for the Finnish and Swedish governments on looking for projects, and I think when you actually see the projects, you see the impacts, and that makes it concrete. Otherwise, it feels very abstract. But I've worked with hundreds of projects, and that's where you see it. We're trying to reduce emissions or remove emissions that would not otherwise happen all around the world, and bringing technology, sometimes local technology, sometimes high-tech, not always high-tech, but sometimes. And basically the idea is that you're achieving through cooperation more than you could achieve alone, and things that we can work together on. So I really see that cooperation aspect. We can never get to 1.5 degrees without cooperating, and this is a way to cooperate. And some parties with the money will pay, and the ones with the potential and the need will implement, and then we will share the results. And that's, I think, the beauty of this mechanism that we very rarely talk about. Is it is a form of cooperation beyond boundaries to do more than we could do alone, and then sharing those results in some ways. And there's different ways of sharing those results and paying for them.
Jon, you look like you were going to say something.
No, yeah, sure, no. But I can comment on this, but I just want to supplement Hanna-Mari and say that I, as a pension fund and a financial institution, are very much in favor of, financial mechanisms that we can use. And one of the strongest forces that we do have in this world is not Newton's laws and everything else. That's of course some of the very strong forces, but it's the market force. And I think if I just take it back down to something very practical, 4 or 5 months ago, no Dane knew how much the price was of a kilowatt hour. They had no idea. Now everybody talks about it. They even have apps on their phones. And of course, this is due to a very, very tragic crisis in Ukraine. But it just shows that if you have a carbon emission tax, or you have carbon credits, or something like that, you can really get things to move. And this has, lowered the consumption of power in Denmark by more than 10%. And it's really not, something that is really, really, really a big issue, but still it has changed the mindset of consumers. And that's also driving innovation from companies to do better. So I'm very, very much in favor of carbon credits, carbon emission tax, and so on. And that's what I do every day is, dealing with financial instruments.
How can carbon taxes work together with carbon compensation?
Well, we've worked with both. In the Nordic countries, have been supporting developing countries in introducing carbon taxes and other mechanisms. And interestingly, some countries, South Africa and Colombia, for example, have introduced a carbon tax. And an alternative to the carbon tax is reducing emissions in your own country and getting carbon credits and paying your tax with these carbon credits. So there are some interesting combinations. In any case, you have a monetary value for your emission reduction, which you didn't have before, and that incentivizes private sector to reduce emissions.
I was going to go one step back, Jan, because I won't let you so easily off the hook. So, we were talking about the slightly bad reputation that carbon markets can have, but how can you then track the financial flow so that we're certain that in your line of work we use or we reach the intended impact? When you say that you want to invest with a purpose, so how do I control you?
Yeah, I think that I'm actually very much in favor of what we do in the Nordics is that we have a strong regulatory view on this. I think that's a very good thing, and it's a lot easier to do business if you know within which frame you're acting as a pension fund. So I'm in favor of regulation. But let's go back to the carbon credit. Carbon credits right now, the issue is credibility. Can you trust it? Is it greenwashing or not? And if you look into this from a more sort of high-level meta discussion, we always know that we overestimate what we will achieve in the short term and underestimate what we will do in the long term. And I think that's the same situation we're in now. Now, there was a very good idea with carbon credits. Everybody was in favor. And now we are sliding a little bit down and seeing all the trouble, all the issues. How do we ensure credibility? How do we underwrite it and so on? But with hard work, I'm sure that we can bring in the credibility, and then, because it is one of the solutions, and it will change the way that we do business. And it's a lot easier if regulators say, I have to do business that way. Then it's not my decision. And my fiduciary role for my members is to ensure that they get the highest pension. It's in the law in Denmark. And if I don't do it, and I do it really bad, eventually I can go to jail. So I have to keep that in focus. But if other regulation says that I can use carbon credits or we can have carbon emission tax, then for sure I would change even more. So I just call on regulators, push us. We're ready.
So the Nordics are kind of leading the way here.
I think in many ways, when we come to the climate and the green transformation, the Nordics are definitely leading the way, and that's also what I experienced. Just yesterday evening, I was at the first announcement of here at the COP in the Egypt pavilion, together, with John Kerry and all of these very, very high estimate, very, very, very fine people. And what I know is that some of the Nordic countries did a lot to make this happen. And that's because they know what we do and they can see that we do good in the Nordics and they want to copy that. So I know that John Kerry, as one example, is very much in favor of the Scandinavian model, not only due to politics, but also to what we do.
Hanna-Mari, you've been working with Nordic Code for voluntary compensation. And why is there a need for that? And how could that contribute to the path towards a net zero global context, in a global context, I mean?
Yeah, I'd actually like to bring carbon markets generally. Voluntary carbon markets are part of carbon markets. So either you have a voluntary buyer or a public buyer, you buy it for voluntary purposes or compliance purposes. Both are hopefully contributing to the same long-term goal. And for them to all contribute to the long-term goal, they have to be of the same quality. And as we were talking earlier, the trust is absolutely essential. And it is something that the carbon market has, for good reasons, suffered from. Good and some are perceived problems, but there's some real problems as well. But there's been a lot of work, especially by Nordic countries, over the 20 years in trying to address these things and really pick the good stuff. And hopefully we can get the voluntary action and the compliance action all working with the same level of quality. I think that's really important, that even though you use them for voluntary purposes, the quality is the same. And it isn't perfect, totally agree that, but how can we really start working together, the governments and the public-private sector, the Article 6 of the Paris Agreement, and then the voluntary standards in the voluntary markets. This actually division between voluntary and compliance is getting blurred, and even governments can buy them for voluntary purposes, so it's a bit of a mix. So the important thing is using those who want to do more than what they can do at home, and allowing them to use carbon markets as one option, and they need to be of good quality, and then they can help towards the Paris Agreement's long-term goal, either by helping in the targets or going beyond the targets. But trust is absolutely integral, and then that also means that the voluntary market has to have the same level of quality as the government. So I would really like to see the voluntary and the government pilots on carbon markets really come together. And then I think with the lack of trust, there's actually three different things that we're not trusting. One is the quality of the credits, but it's also whether companies who are using these or other actors are doing their own part first and only using credits on top of that. That's a separate issue from good quality credits. And thirdly, when they're using these credits, what are they saying? Are they making truthful claims? And all three things are quite different with different solutions, and they're all quite mixed up into this big bowl of suspicion. So I think it's good to break them down and find the solutions there.
It's often said that trust is the Nordic gold. And we are, at least I think, somewhat unique in the world. And then if trust is to be a vital element in this transition for the carbon markets to work, it looks kind of gloomy to me if you look at the lack of trust in the rest of the world, or big parts, big chunks of it. So am I being just a doomsday prophet here, or?
Yeah, I think the jury is out right now, and I don't even know how I would bet my money, but I know I'm gonna spend all my hours, working hours anyway, hoping that trust comes, because if trust comes, then the scale comes. If the trust doesn't come, it's not a useful tool. It is really very important that way. And right now, we've recognized the challenges that we had in the Kyoto period, and we have been working throughout, and the Nordics have also been hand-picking projects on top of what's happening in the standards. But then there's also the Paris context. We are also needing to make sure that these credits are not just meeting the old criteria, but they're also in line with the transition, whatever that means. And so there is a really lively moment in time now, and there is lots of efforts to increase trust. Whether they're successful, time will tell. I don't know when, but quite soon. And that will tell whether it's a useful tool or not. So we are wanting, as Nordics, to be very active at this very important moment in time to make sure that we can save the trustworthy part of the markets and keep the the ones that are undermining the trust away.
Jon, you would like to say something?
Well, just, I mean, I think actually the Nordics and the European Union can do something here, because we're quite good at making regulation in the EU. Actually, sometimes we think we're moving slow and it's very complicated, and but actually we are very good at doing regulation. And if we can make, you know, a decent and fair regulation around this, we can get the big financial institutions, the big banks, to actually underwrite the credibility of these financial instruments. And that is, you know, when this is happening, then it's a market, and financial institutions do this every day. They're really, really good at it, and they know if they don't do things the right way, things will happen to them. So that will ensure that you can, you know, they will underwrite the credibility of these carbon emission instruments or carbon tax or whatever it is. So we need to push it out to the financial institution, and then we need some regulation to ensure that they can take that risk on their books, and then I'm sure it's not a problem. And the issue about that is that it's back to, you know, we overshoot in the beginning, and it takes a while, because to make that regulation, it's not a 3-month project, it's a several-year project. But it will come eventually, I'm sure.
It's good to hear that you're optimistic.
I'm a Nordic, I'm optimistic.
But okay, taking that optimism, and when you invest, I mean, I'm just curious here. I'm an old journalist, so how much is the PKA portfolio in green finance today, and how much will it be in green finance in 2030?
So right now we have 13% of our portfolio is invested in the green transformation. So it's primarily wind and solar farms in the US and in Europe. It's $5 billion invested in that. About 1.5% is actually invested in the emerging and developing economies, together with the Danish SDG fund IFU and the Maersk African Infrastructure Fund. And our goal is to reach 15% by 2025, and then on to 2030. And we are signed up to the Net Zero Asset Owner Alliance, the Paris Aligned, and, you know, we're trying to do as good as we can. But I must say, in the current regulatory environment, we are close to our maximum. If we, you know, we have to diversify our portfolio. We can't bet on just one thing. We have to make sure that there are pensions in 20 years and 30 years for our nurses. So we have to diversify. So we are almost at a maximum, but not all there. But a lot of pension funds across the Nordics and in the world in general can invest a lot. I think some of the Danish pension funds, I'm not that familiar with the Finnish ones or the Swedish ones, but some of the Danish are very far in this process.
So if I say a net zero portfolio, all of your activities in 2050, is that a dream or a possible reality?
You know, back to the perspective that we overshoot in the beginning, and I think 2050 is the long term. I think it's possible, but it will not be driven us, you know, like divesting companies. We have to move, you know, all the companies in the world. And the way that we have achieved the goals we have now is to set high ambitions, and we don't know how to solve it. But then we work along, and so far we have actually achieved our goals, and sometimes even before we set the target, by setting in a target that we did not know how to achieve, but we have a target and then we move forward.
Going back to you, Hanna-Marie, and carbon markets, I mean, what kind of initiatives are needed as the next steps, and who should take that lead? Is it the Nordics, or we are a small bunch of people? Maybe we need some larger unity together?
Yes, I think Nordics are larger than their size, also because they work with international peers. I think that's really important, that the Nordics is kind of a step between the domestic and then the international. There's a lot of initiatives already around, so anytime there's a new initiative, people are like, oh no, not anymore, we already have too many. But we had this Nordic dialogue on voluntary compensation to make sense of the initiatives and to contribute to those initiatives and say, what is our view on best practice? And what do we see that the carbon markets have to go towards to maintain their credibility? So yeah, it was a new initiative, but it was for the other initiatives. And this is a dialogue that's about to end, and now I would really like to see the Nordics continue cooperating, because there's a lot of things happening at national level. Like Finland, there is voluntary carbon market regulation or guidance being drafted right now. And so also in Iceland. So that's already an obvious reason why we should talk about this at the Nordic level. Part of us are in the EU, so we should really talk about how this fits in the EU. And then we want to talk with our peers like New Zealand, Thailand, Peru are talking about these same things. And so this way Nordics can cooperate to bring coherence and alignment around the world, because that's what the private sector needs. You don't need different rules in every country. So I think the Nordics is as small enough, but also very respected, because we have 20 years experience. So I think that's why we need some Nordic cooperation together with our international peers.
Our time is almost up, and I have saved two last questions for both of you, which we always have here at this stage at the Nordic Pavilion. So, I mean, we have a focus on what the Nordic looks like in 2050. Well, how do the Nordics look like in your opinion, John?
So how do the Nordics look in 2050?
2050, the broader picture.
It's a very good question. It is hard to answer, but I think very much will be the same, but some things will have changed. I think I would like to, it's a very important thing that we have to change as well as citizens of the world. We can't go on a Greek holiday every year. It's not possible, so we have to change. But, we might find green solutions to do that, so we can get our share of sun as we need in the Nordics. So things will change. But I think in many ways it will be the same, of course, 30 years later. But I think that we will solve a lot of it. We will have green solutions. I'm quite sure that we will have all green power in all of the Nordic region, and it's going to be before the 2050. And we will have green hydrogen and green fuels that will help us to solve where we can't use electricity. So I'm quite sure that it will be pretty much the same thing in the Nordics. The issue is the rest of the world, and especially in emerging and developing economies. And I'm very, afraid of what will happen from a geopolitical perspective.
Hanna-Mari, your turn.
Yeah, I am hoping that we will actually get to that vision already before 2050. Yeah. At least in Finland, we're aiming for 2035. And hopefully if we can make things smart and really change the system so it works together and not in silos, then we can start to have the circularity and then the green electricity electrifying a lot of the different sectors, and really have to figure out the whole forestry and biodiversity issue. And then I hope that we'll be looking back at now, and basically, 2035 is not far away, and neither is 2050. The 1990s is as far away as the 2050s. We're going to laugh at why we resisted this, because life is good. And I really hope that we don't feel it as a sacrifice. Of course, things will change, but we'll get good things instead. And then once we've shown it in the Nordics, we will take it to the rest of the world, cooperate with the rest of the world. That's where we will be needing carbon markets. But also within the Nordics, we might cooperate, because the harder the things we're doing, like bioenergy, carbon capture and storage, which is then stored in the Icelandic ground, we actually need Nordic cooperation, and we might need carbon markets to just share the benefits here, if the money comes from different countries and the carbon goes to different countries. So even in extremely ambitious situations, you can do more with cooperation.
Thank you so much, Hanna-Mari Ahonen and Jon Jonsen. Give them all a hand. And we will be back tomorrow with a new Nordic talk at the same time and same place. Thank you.
Good morning and welcome everyone to this session on climate investment in emerging markets and developing economies here at the Nordic Pavilion at COP27. We are thrilled to welcome our distinguished speakers and those attending here and those watching online. My name is Nina Okot. I'm Head of Communications at Nordic Council of Ministers, and I'll be your facilitator this morning. Today's session is hosted by the Climate Investment Coalition with support from the Nordic Council of Ministers. The Climate Investment Coalition is an international public-private initiative working to mobilize transformational commitments for climate investments by 2030. At last year's COP26, the Climate Investment Coalition presented here at the Nordic Pavilion a total collective commitment of $130 billion for clean energy and climate solution investments by 2030 from Nordic and UK pension funds. Today's session focused on how to support private sector to bridge the finance and investment gap in emerging markets and developing economies by 2030. We are pleased to bring you today some inspiring speakers that will present the key perspectives from emerging markets on the importance of increasing investments in these regions, asset owners that will share progress with climate and clean energy investments since COP26 announcement, present the case studies of successful investments made in emerging markets and developing economies, present recommendations from the private sector for governments and their development partners. And following this morning's session, there will be another session linking to today's topic and taking a deep dive into the role of public actors, blended finance, and the mobilization of private capital for climate finance. So stay tuned for that. And now, I'm pleased to welcome to the stage Joe Tundal, Director, Environment Directorate, OECD.
Well, many thanks, Nina, and I'm honoured to be here to make a few opening remarks. These events are always a competition for who's got the loudest PA system, so I do hope you can all hear reasonably well. So this is a really super important topic, obviously, and a key theme of the COP this year. The world has changed substantially since COP26, only 1 year ago. We already had COVID pandemic, we had supply chain disruptions, cost of living increases were starting to be being felt, but the far-reaching economic and social consequences of Russia's war of aggression in Ukraine have added exponentially to the challenges we're facing. And it makes it all the more important to avoid rolling back action on climate change. Instead, our only choice is to ratchet up ambition and, even more importantly, back that up with urgent and cogent action to get there. Finance is critical for a successful transition. Investment in clean energy in emerging and developing economies is going to have to increase from $150 billion a year in 2019 to $1 trillion a year by the end of the decade. Now, of course, that's not all new money. A lot of it is going to have to be redirected from brown investments along the spectrum to green investments over that time. Delivering fully on the $100 billion goal and directing public funding away from fossil fuels and towards the development of low carbon alternatives is definitely going to accelerate those efforts. And as you alluded, Ina, the OECD's latest data shows that climate finance did grow between 2019 and 2020, but the total of 83.3 billion US dollars that was provided and mobilized for developing countries in 2020 is significantly short of the goal. Even worse, at the same time, OECD and IEA analysis shows that government support for fossil fuels in 51 countries worldwide almost doubled to just under 700 billion US dollars in 2021. And that was from a level of 362 billion in 2020. Now this is sending all the wrong signals about fossil fuel consumption, and very often the support that's provided is not targeted to those in genuine need. Public finance for climate change has to act as a pump primer. It's not going to be the sole answer to making the transition to net zero. The OECD also, therefore, promotes policy reforms to unlock private capital's potential. We recommend action in 3 areas, and I'll just mention them quickly. First, investors need to see leadership from governments to steer finance towards productive uses. Governments need to set clear, Paris-aligned, i.e. the 1.5 degree goal, nationally determined contributions. They need to set net zero commitments and sector-level decarbonisation pathways to help investors demonstrate to shareholders that they're doing the right thing. It's a move from ambition to planning to implementation. Second, governments are going to need to deploy public finance to maximum effect where it's needed by crowding in private finance and leveraging. The right policy environments and enough public finance to de-risk investments is going to act as leverage. Blended finance involving NDBs and other institutions can help rapidly scale investment. So the third recommendation from the OECD is that investors need to be clear about which investments are clearly aligned with the Paris goals. And to that end, the OECD is supporting the G20 with the development of a transition finance framework. This is all about credibility and avoiding the risk of greenwashing. So we welcome today's progress report from the Nordic pension funds, and leadership by investors combined with supportive policy environments is going to be critical to financing the transition to net zero, while at the same time enhancing resilience to climate change. Thanks for the opportunity to speak today.
Thank you. Thank you, Jo. Oh, I have it. And now I would like you to come a little bit together as a community and move forward and closer if you need to hear better, I think, the background. So otherwise, if you don't mind. So I think when we are going to have something on the screen, it's easier to hear if you are a little bit closer. Thank you. And now it's my pleasure to welcome Her Royal Highness Princess Absedjikma, a Mossi princess from Burkina Faso, initiator and leader of the Mama Light initiative. Welcome.
Thank you so much, moderator, and for bringing us into this very important. Before I start, I wish already to congratulate the Nordic for taking the leadership in terms of climate finance, walking the talk, mobilizing since COP26 in Glasgow. Today, event is here to report on progress made and also to see how we can work with others and how to find the way to mobilize finance. I want to go back to what OECD beautifully said with key figures going from brown investment to green investment. What you're looking for us as to how are we going to aggregate projects bankable in my continent and Africa. By the way, welcome to Africa. We're waiting for you, and we're so delighted to have the pension fund, because we do need long-term finances, and that's what we need. I will go on now to my own program that I lead, the Marmalade Initiative for Sustainable Energy. We are now aggregating, has been under the West Africa Solar Pact. We aggregate with the 15 countries in West Africa. Our program has been adopted by the ECOWAS Center for Renewable Energy and Energy Efficiency, by the head of state, and then also adopted by the Glasgow Climate Pact in Glasgow last year. So you see, walking the talk, I start doing my homework. Africa is full of talented people like me. I'm just only the tree hiding the forest. You're most welcome. I'm Francophone. You see that I do learn your languages. I need to learn the Swedish, maybe, and others languages to communicate better with you. Just to let you know that you are most welcome. There is a huge opportunity. We need to learn from you from the technology. We need technology transfer. With you, we're ready to do that. We're ready to share our assets, because we do have assets under our feet that we need you with your technology to help us how to bring it, to dig it up, and to finance our transition, our education scheme. In September, I was in New York moderating high-level panel session with presidents and ministers to regard how are we going to transform our education in Africa. But we do need domestic finances. We need to mobilize our finances. But to do so, we need private sector to come in. That's what I'm so happy to see, that the Nordics is taking the leadership, and the West Africa Solar Pact and the recommendation. We would like to that it reflect the Marmalade Initiative, and that we are ready to work with you on that. And so I know that we, in the interest of time, I'm not going to take too much time, and we give back the mic to our excellent moderator here, and I will look forward to listen to the vibrant panel coming up here. So I do apologize a bit. I won't be able to stay to the entire session, but I look forward to follow up with the Nordic panel. And we thank all the ministers who come together, because policy matters. And we're happy to have the minister, the Council of Ministers of Nordic was taking that leadership. Thank you so much for having me.
And now I have a pleasure to welcome Thomas Anke Christen, Denmark's climate ambassador, for the remarks. Please.
Thank you very much. It's a great pleasure for me to be speaking to you today on behalf of Denmark. But before I give a few remarks, I will just preface what I say with telling you that we had an election in Denmark a week ago. The Danish government has resigned. Our prime minister is a caretaker prime minister, and our ministers are caretaker ministers. And that means that there are certain limits to what we as officials can say. That's also why you don't have a Danish Minister of Finance standing here today, but you have to do with me representing Denmark. Today is Finance Day here at the COP, and one of the issues that we hope as Denmark, but also as Europe, that we will be talking more about at this COP is the role of global financial flows in meeting the targets of the Paris Agreement. There is a paragraph in the Paris Agreement on this, but we haven't really unlocked yet how to bring it into the conversation at the COP. It's called Article 21C. I would urge all of you to help stimulate a conversation on how to bring that discussion on global finance into the overall conversations here in Sharm el-Sheikh. And the conversation we're having in this session here today is very much part of that overall push on aligning global flows with the targets of the Paris Agreement, with the 1.5 degrees Celsius targets. Because it's clear that in order to achieve the Paris Agreement goals, governments cannot do it alone. That is much too complex, and we do need the private investments in order to accelerate the transition. We need to build public-private partnerships, and that's why we're so happy that the pension funds have partnered with us in the Climate Investment Coalition, so that we can together find ways to make those flows both happen, but also scale them up and speed them up, including going into emerging markets in Africa. And I very much salute the words of the princess. The coalition was launched in 2019 with a first target of investing $50 billion in the green transition towards 2030, and that target was raised in Glasgow, where 42 pension funds, Nordic pension funds, jointly committed to investing $130 billion in clean energy and climate solutions towards 2030. So the capital is there, and now it's a question of how to deploy it, how to find the ways to actually make it work. I think the conversation here today will very much be about the enabling environment, and Joe from OECD mentioned some of those elements that go into setting the right enabling environment for the capital flows to happen. Some of them are around setting ambitious climate and energy targets, which most countries have now done, but then also setting up the regulatory framework, including when it comes to energy, long-term energy planning and transparent energy market regulation. But then also helping to create the financial vehicles that can de-risk the investments. And I'll come back to the de-risking part. It's clear that emerging and developing economies have a key role to play in the energy transition, and despite the fact that energy costs, renewable energy costs have fallen rapidly, wind and solar power is cheaper than fossil fuels, it is still difficult to catalyze those private investments, because investors tend to feel that investments in those markets are too complex, too difficult, too risky. And that also means that the cost of capital goes up and it becomes very expensive to invest in these markets. Bilaterally, from Denmark, we are partnering in energy transition work through our energy agency with 13 countries in the global south, including 4 in Africa. And we think that building the right enabling environment in a way is a way to de-risk in and of itself. It is a way to show the least cost development of renewable energy. And our bilateral energy cooperation is about finding the least cost pathways to the energy transition. They are designed in collaboration with each individual country and depend on the national context and needs, but the overall objective is the same. And by sharing the Danish experience and providing capacity building on how to create these energy markets, renewable energy and energy efficiency, we think that countries can build those frameworks that also will allow the investments to flow. One last point is that there is also the multilateral collaboration now around this transition that can also de-risk the investments. Yesterday, we saw the launch of the very large $15 billion agreement with Egypt, brokered by the EBRD on energy transition, food and agriculture. There's work going on just energy transition partnerships that include South Africa. And we think that there's a case to be made to look more into how to use these global donors, finance, MDBs coming together at country level as a de-risking mechanism. So in conclusion, to close the investment gap that is so huge, investors, institutional investors, financiers like you play a critical role. Your engagement in stepping up climate-related investments and phasing out fossil fuel cannot be underestimated. So we look forward to hearing from you what you think is needed to accelerate your investments in emerging and developing economies, including in Africa. Only by strengthening our collaboration can we succeed in stepping up global climate action. So thank you very much.
And now I'm pleased to introduce Dr. Tuli Kumalo, CEO, South Africa's Presidential Climate Commission, to bring forward the important perspective from emerging markets. So welcome.
Thank you, Nina, and good morning. Is it too loud? Okay. Let me say all protocol observed, because I know there is protocol to be observed in this room. And just to bring the perspective from the emerging markets, I think it's important to know that we want to grow our economies, but we have serious issues of energy access and security. And so in growing the economies, those imperatives need to be addressed. Let me talk a bit about South Africa. We have a Presidential Climate Commission, which is set up by the President to ensure that there's a just transition, oversee it in the Republic, ensure that we leave no one behind and everybody participates in the transformation of the economy to a low carbon economy and climate resilient society. And in this regard, private equity and investment in the just transition and beyond will require massive sources of funding. So long-term savings like pension and provident funds can play a critical role in amassing and directing the flow of such funds. We have a history in South Africa where we have used such funds to drive massive infrastructure development in transport, health, and public-private partnerships. And it has proven to work as our country undertook its post-apartheid reconstruction program. We now need similar investments to enable the just transition towards 2050. Importantly, we have shareholder activism that continues to play a role in ensuring that workers' savings are invested to protect the environment and to achieve our net zero pathways that we have committed to in the Paris Agreement. We have a just transition framework that has been approved by Cabinet, and we're now developing an implementation plan for that. But we also mentioned the investments that have been made in South Africa. We now have the Just Energy Transition Investment Plan, which we have launched and was launched by the President. The President himself was here. I believe that it's an important step towards creating that enabling environment for investments, because it prioritizes and sequences what we need to do in South Africa in terms of the just energy transition. But overall, I believe the whole of Africa is ready. We just need to ensure that there's the enabling policy environments, and we have prioritized for ourselves what needs to be focused on in this just transition. And let me not forget to say we're grateful to funders like yourselves and for taking interest in ensuring that the just transition globally does not leave the emerging markets behind. Thank you very much.
Oh, and thank you for taking up the just transition, very important part of today's session. And now, I'm pleased to present a message from Kent Damsgaard, CEO, Insurance and Pension Denmark, presenting the Danish Pension Fund members of the Climate Investment Coalition. We're going to have a video, so I hope that you can hear, otherwise it will be online afterwards.
Good morning and welcome to everyone joining this announcement. My name is Kent Damsgaard. I am the CEO of the industry organization Insurance and Pension Denmark. I am pleased for the opportunity to announce the 2022 status on the Danish green investment commitment in clean energy investments from the Danish pension funds. In 2019, 3 years ago, we pledged to invest $47 billion into additional new green investments towards 2030. Today, I'm happy to announce that since last year, the Danish pension funds have added another $9 billion in new clean energy investments. This amount corresponds to each Danish household investing approximately $3,200 of their own pension funds into clean energy solutions. Since our pledge in 2019, we have reached now a total of 1/3, amounting to $15 billion. Despite volatile financial markets and global stock market declines, the Danish commitment is still on track. The industry's substantial increase in new clean energy investments contributes to the industry's total green stock suffering only a marginal loss. In 2022, the industry's total stock in clean energy investments amounts to $32 billion. Despite this loss, we are still above the linear target fulfillment, and it is still realistic to fulfill our target. The Danish insurance and pension funds are pioneers, setting ambitious green goals, benefiting both the climate and hopefully inspiring other countries to do the same. The $32 billion are allocated in Denmark and in the rest of the world. Approximately 40% of our green investments are invested in Denmark and 60% are invested globally. Of these, $790 million are invested in emerging markets, which makes up approximately 2.5% of the industry's total stock in clean energy. How to move forward? My key message today is, if the industry's green investments are to grow at the same pace in the coming years, politicians and authorities must continuously focus on how to improve the framework, the conditions to create an attractive environment for private investors to invest in green assets and help pave the way for the green transition. Thank you for your time. I wish you all a great and inspiring days at the COP.
So, thank you, Kent. It's great to see that the Danish pension funds taking the lead, not only the climate investments, but also the reporting of these investments to show the progress and impact. We look forward to presenting the total collective reporting of annual investments, which is expected to be announced in the first quarter of 23. And now it's my pleasure to welcome Heidi Finskas, Vice President Corporate Responsibility at KLP.
Yes, we at KLP, a Norwegian pension company, we have invested in renewable energy in emerging markets for almost 10 years now. It naturally started with the renewable energy in Norway, our home market, even before that, then gradually expanded to Europe, other parts of the developed world, and then finally also we took the step to emerging markets. Today we have invested 35 billion Norwegian kroner, or 5% of our total assets under management in renewable energy. And we also have an annual target to increase and make new investments of 6 billion kroner annually. And since then, since we started then 8-9 years ago in the first investments, we have now been part of building almost 50 new renewable energy projects. Around half of those are in emerging markets, and these are now producing energy equivalent to 1.5 gigawatt of power, and the energy need equivalent to 10 million people in those markets. These are South Africa, Mozambique, Kenya, Vietnam, and others. Why did we do this? Well, it was we wanted to put capital at work where we knew it was the most needed. We wanted to make investments that have a direct impact on the SDGs while at the same time creating attractive returns. And we wanted to get experience from these markets that were new to us from a diversification point of view. But as we know, investing in emerging markets for an institutional investor as KLP is not straightforward. It is pretty far or pretty much different from the investments that we normally do and have a different risk and return profile. So what we did then was to establish new partnerships, new collaborations, new investment structures that will make it possible for us to make investments with a suitable risk and return profile. So I was invited here today to share with you some example, or one example, and luckily I have many to choose from, but I will share with you one of the most recent examples actually. It is a Tara solar power plant in Rajasthan in India. It is quite a significant size, 420 megawatt solar power plant that is being built right now. We're doing these investments together with the Norwegian Climate Investment Fund, which is managed by Norfund, the Norwegian DFI, which is one of our main partners and a partnership that brought KLP into the emerging markets then almost 10 years ago. This solar power plant is developed by the Italian company NL. So what were then the success elements that made this project investable and bankable for an institutional investor like us? Well, I would highlight two key success elements. First of all, it was the offtake certainty. The government of India, they have provided a firm offtake agreement at a fixed price through a federal agency. And this effectively eliminates both volume and price risk for the project and providing a credit risk of federal support. So this contractual structure reduces the risk level that is acceptable for us as investors and is really a key to attracting institutional capital like ours. And as a result of this structure, the project also could be financed on commercial terms from both equity and lenders and without no need for special concessionary or blended finance instrument of any form. The second success factor was an industrial partner. Because we at KLP, we will always be a financial, not an industrial investor. And in this particular project, it was NL that is our industrial partner, and it's also a majority owner of the project. And as one of the world's largest greenfield developer, NL is able to provide cost-effective solutions, and they're able to manage the construction and operations of the project to world standards. And they're also committed to high environmental and social standards that is very important to us. But this collaboration between a financial investor and financial investors and industrial partners is not only beneficial to us, it's also beneficial for the industrial partner because as financial investors, we're effectively sharing risk with NL. So that NL's risk exposure is at an acceptable level for them as well. Of course, there are still risks, of course, related to the project. One risk that I would like to highlight is that the project, of course, is exposed to currency risk because both its revenues and the debt financing are in Indian rupees. And as all equity investors are foreign investors, we're of course then exposed to the currency risk. And in addition, it's also difficult to fix interest rates on local currency loans for the full duration of the debt. So the project remains, of course, also exposed to long-term interest rate risks. So that is one example from our portfolio. But to sum up also from the previous experience that we had, we have really good experience and very satisfied with the returns that we've seen so far. So we're eager to continue building this portfolio of renewable energy in emerging markets. Thanks.
So, thank you. It was a wonderful case. And now I'm pleased to welcome Jon Jørgensen, CEO of a PKA. Please.
Am I on? Oh, yes, certainly is. Thank you very much, Her Royal Highness, esteemed colleagues. Thank you for having me here. Also, a very great thank you to the former CEO of PKA, the original founder of the idea of this pledge, Peter Damgaard. So thank you. It was a very good idea, and I'm very proud that I'm able to continue that idea. We at PKA have a very firm, strong belief that we have to continue the hard work of doing these green transformation investments. We have already now invested 13% of, or $5 billion in the green transformation, and up to 10% of that is invested in emerging and a developing economy. And actually with a very strong focus on Africa. We invest through the Danish SDG fund IFU, and we also invest through the A.P. Møller-Mærsk Africa Infrastructure Fund, and we are very happy to do these investments and our founder investor in that. And just yesterday there was a big announcement in the Egyptian pavilion, and I was proud to be part of that and be there, where there was a $15 billion pledge to invest in specific investments in Egypt. And from that, Denmark is a small country, but we contribute with a 100 million euro investment through the IFU. So I think and believe that is the first announcement on this COP, and we're very happy to be part of that. So as you saw, Kent Damsgaard, the CEO of the Danish Insurance and Pension Organization, said that we now have 240 billion Danish kroners invested already in the green transformation, and we're moving on. It's a little lower than last year, but remember, markets has been down, quality in the way we measured it has been up, and we are very sure that we'll make the target, and I'm also sure that PKA will take our fair share and will reach our targets way before 2030. So thank you very much for being part of this, and I'm very happy to do investments and happy to be here at the COP, so thank you. And in the respect of time, we have so many cases, I'm sure we will be happy to share them with you at another time. Thank you.
Thank you, Jon. And there will be a possibility to talk and share experiences at the end of the very end of the session. And now we have a pre-recorded video message from the head of sustainability at Skandia, Helena Hagberg.
My name is Helena Hagberg, and I'm the head of sustainability at Skandia, one of the major pension companies in the Nordics and part of the Climate Investment Coalition. In 2020, Skandia set the goal of doubling our green investments by 2025, and we are well on our way. In 2021, we extended our commitment. Until 2030, we will invest an additional $4 to $5 billion in green bonds, in green real estate, and in green infrastructure. Today, we have about 7% of our portfolio invested in such assets, and close to $200 million are invested in infrastructure projects within solar, wind, and geothermal energy, as well as in support systems such as batteries and energy storage. A major part of this is in Europe and North America, and our current climate investments in emerging markets and developing countries are limited. Our primary purpose is of course to create safe returns for our beneficiaries, but with a clear ambition to also contribute to the climate transition. We have around $500 million invested in bonds issued by developed banks in Africa, Asia, and Latin America, where part of the use of proceeds are for environmental and climate purposes. These are liquid assets with low barriers for investments. The level of impact can, on the other hand, be difficult to assess. Infrastructure investments can be the most impactful ones on the ground, but the risk and return profile is often complex. In that case, we invest a lot of time and resources to get the final investment decisions. We are proud that we have committed capital over 25 years for the expansion of sustainable energy infrastructure in West Africa. Through a partnership with a dedicated emerited impact fund manager, we have invested in 4 large-scale solar parks in Senegal. In this case, the real-world impact is clear. The plants provide around 1 million Senegalese with clean and cheap energy. The projects also place great emphasis on engaging the local community and have contributed positively to community development in several ways. This is important to us, and we would certainly do more of this if there were more truly impactful investment opportunities available on the market, if more of these investment proposals were within our risk limits, and at scale that makes it worthwhile spending the extra time and resources. We call for public and private sector stakeholders to promote and facilitate this development. Thank you.
Thank you to Helena, and we have one more video message, and it's from Jan Erik Saugstad, CEO, Storebrand Assets.
Dear ministers, government representatives, delegates, ladies and gentlemen. Investments of close to $300 trillion is required to meet a climate target of net zero by 2050. Developing nations need an additional $100 trillion to reach net zero by 2060. Time is short to scale up these investments, and I have even shorter time, 3 minutes I'm told, so I will share my 3 key reflections as an investor. Storebrand is a pioneer in sustainable investing and represents about 100 billion euros of investment capital. Firstly, we need to scale up. Currently, emerging debt is yielding 9%, but is still not attracting enough capital. However, while scaling is an issue on debt, equity must be reinvented. We need better structures and frameworks for direct equity investments in projects and companies to build scale. Secondly, investors can do a lot, true. However, we cannot do it alone. There needs to be an orchestrated interaction between governments, corporates, and investors to succeed. To boost returns or reduce risk, to ensure ownership, to secure offtake of energy or products, access to raw material, and so on. To mobilize risk capital in scale. Thirdly, to be successful, we need to continue to focus on nature as part of the climate solution. This was well recognized in COP26 and must be kept high on the agenda in COP27. Nature-based solutions are key, and loss of carbon sinks through non-sustainable land use is critical. The focus in this COP is implementation. I am very grateful to be able to share Storebrand's perspectives. We often say, words come easy, actions don't. We try to focus on taking action. Thank you.
Thank you, Jan Erik, and thank you all the distinguished institutional investors. To sum up the investor perspective and present the recommendations, I'm pleased to invite Heidi back to the stage. Welcome.
Okay, yes, here we are. Yes, as you've heard, there are many similarities in the messages from the asset owners here today. But to sum up, the pension funds are willing to scale up the climate investments given the right framework conditions. And we, the pension funds, we've committed to collaborate both across organizations, regions, and also with the Nordic governments to build strategic partnerships, to build investment structures, and to build multilateral climate finance models. I have the honor now what can the public sector do then? What to stimulate to the investments that we've talked about today? Well, the pension funds, they have elaborated some recommendations for the Nordic public sector, and I have the honor to present those recommendations to you. Well, I could easily sum up those recommendations in one word, and that is de-risking. Because we think the public sector can foster the enabling environments for investments and market confidence really through risk mitigation in many ways. First, the Nordic public sector can develop innovative financing approaches and contractual structures that are reducing the investment risks. This could include first loss guarantees, off-take agreements, or power purchase agreements, for instance. Second, the public sector can facilitate and scale blended finance vehicles. This will create flexible pools of capital to bring investments within institutional investors' risk limits. And different forms of blended finance are yet to be explored, and we think there is a great potential in exploring those. Third, important de-risking is also taking place through traditional policy work and capacity building that will strengthening laws or institutions that would in turn provide greater certainty for us as investors and also for developers. We also recommend the Nordic public sector to promote international cooperation efforts, efforts that directly target the mobilization of private capital. We also talked about scale, how important that is. Again, Nordic collaboration, yes, that's a good start, but also collaboration even in more international scale. So examples of efforts could include risk management instruments backed by concessional or blended finance. It could be joint funds established by public development finance institutions and private entities, for instance, or it could be public-private partnerships or multi-sovereign guarantees. Finally, we are also calling on governments from emerging markets and developing economies to continue developing more net zero aligned investment opportunities. The capital from the Nordic Pension Fund is there, and together we hope to create those environments and those frameworks that make these partnerships possible. More information about these recommendations will be available on the website afterwards, so let's hope they continue the discussion afterwards. Thanks.
Thank you, Heidi. And this cases and ambitions presented today are highly motivating, but there still remains a lot to do. And as we move towards the end of this session, I'm thrilled to welcome one more and one of the most important voices in this discussion, Natalie Mangondo. She's a climate champion in Youth Fellow in Finance for 2022. And she's an economist with a background and experience from sustainability. Please.
Can you hear me? So, of course, as a young person, I can definitely compete with everything that's going on around here. So I am the Finance Youth Fellow with the Climate Champions team, and that means I work to support the climate champions who were appointed by the parties to drive non-state actor action. That is Dr. Mahmoud Muhildin and Mr. Nigel Topping. With the climate champions this year, we've really been focused on emerging markets and developing economies. As you may have known, we've established the GFANS Africa network, and we've convened 5 regional roundtables with the UN Regional Economic Commissions to develop this pipeline of projects that were mentioned by the previous speakers, and to try solve this dual conundrum of project proponents saying that there's no finance being being moved off of the sidelines, and then the issue from financiers saying that essentially there aren't enough projects in the pipeline. So I think just to conclude, I will reflect on the 3 areas that I've heard from our speakers today. And I think, of course, Ambassador Christensen started out by outlining the ambition needed, and that was really enforced by Her Royal Highness, particularly for the most vulnerable. As you would know, 9 of the 10 top 10 most vulnerable countries are based in Africa. So they really did a fantastic job by outlining the ambition needed. Second of all, we need action, of course, and governments can't do it alone. We need the private sector to be engaged in this. And the private sector really shouldn't just be viewed as a pool of capital, but a pool of expertise. And this is particularly important for young people, for the most vulnerable people. We need capacity building, we need project building, we need blended finance instruments, we need innovative instruments, and private finance is going to be essential in supporting the projects and the programs in developing economies and emerging markets. But I really want to reinforce that they need to do this in a manner that doesn't increase the indebtedness of developing countries and emerging markets who are already currently under severe strain. So of course, other areas that were outlined in terms of action were the use of blended finance, as I said, innovative instruments, de-risking mechanisms as outlined by my colleague over there, and then alongside with aggregators, particularly for the African economy, because we always see this challenge of small ticket sizes, and that's something that the financiers have really outlined, that the small ticket size is a big problem for them. And then the last area I've seen is accountability. And as young people, we're always on the front lines of accountability, but I implore you in positions of power to hold each other accountable as well. So those are the 3 areas I see: raising ambition, driving action, and then incorporating accountability, because the cost of inaction is much higher for people like myself and for people from countries like my own. Thank you.
Thank you so much, Natalie. And now, to provide some final remarks and close today's session, I'm pleased to welcome Peter Damgaard Jensen, co-chair of the Climate Investment Coalition. Please. Just this.
Thank you very much. Thank you very much. First of all, thank you for you, Nordic Council of Ministers, to hosting us. And on behalf of the CIC, I will also thank all the distinguished speakers that have been here today. And of course, also you, the public that have been listening in. What I have heard today is promising in many ways. We have heard from the emerging markets that you are ready to take the investments, you are ready to work together with the developed countries, you're ready to work together with the investors, so that we can find the opportunities in the emerging markets. What we also have heard, and that fits very well into the Climate Investment Coalition, is that we need public-private partnerships. This cannot be done alone by the private sectors and by investors. We also need the public sector. What also been positive is that we have seen that what we started back in 2019 with the 50 billion being promised have developed last year in Glasgow to 130 billion. And we have had the reporting today from the Danish pension funds that actually shows that then money have been invested. We are even a little bit ahead of the track to reach the 50 billion. In CIC, we look forward to report on behalf of all the pension funds later or in the beginning of next year. And my feeling is that most of these pension funds are actually on track to reach the 130 billion in 2030. We have also heard that many pension funds, and we have had some good examples and some principles on how to invest in emerging markets, but we are still behind in that area. It's not enough of these investments that go to emerging markets, and we have had some of the most important things, heard some of the most important things we have to do in that area together with the public sector. So I look forward working in CIC on these important issues. I look forward to work together with both the emerging markets and the public sector in the developed markets. And I hope that we at the next COP will be able to report even more progress. So thank you, all of you.
Thank you. And now the session is at the end. And thank you everyone who has joined here in Nordic Pavilion and online. And thank you for all our distinguished speakers. Thank you.
thank you all so much for coming today. Can you hear me? Once again, hello? Okay. Thank you all so much for coming today. My name is Gillian Caldwell, and I'm the U.S. Agency for International Development's Chief Climate Officer. And I'm pleased to welcome you here today to the Action Plan for Mobilizing Climate Finance, which is, I think, going to be a very dynamic and exciting series of conversations with our allies in the Nordic countries, with the private sector and with government, all to focus on what I think we recognize as a massive challenge, which is how we close the gap between where we are today in climate finance and where we need to be very soon by 2030 at $3 to $5 trillion a year in expenses for mitigation and adaptation combined. We all recognize we are not going to get there without stretching ourselves as governments in new ways, getting more innovative with how we think about our finance, and much closer partnership with responsible actors in the private sector. So it's my real pleasure today to introduce the first of many speakers that you'll be hearing from, but surely the most senior, who is Minister Anne Tveindheim, right, from Norway. And she was previously for planning climate environment in Viken County and as the state secretary at the Ministry of Local Government and Regional Development. But she is now wearing two hats, both as a minister in Norway and as somebody coordinating all of the Nordic governments, which work so closely together. So welcome, Anne.
Thank you so much. Thank you. And thank you all for being here. I hope you can hear some of what we're saying, because it's a very important event. I'd like to, first of all, say that it's a pleasure to welcome you all. This is a joint event between the Nordic countries, Convergence, and USAID. Even closer. Is that better? Great. Today is the finance day at the COP, so it couldn't be more timely. So we'll just have to, you know, survive all this noise around us and concentrate on this topic, because it's what we all got to Sharm to deliver on. So concentrate. Because the investment gap in developing countries for reaching sustainable development goals is a staggering $3 trillion. $3 trillion. And we all know that, you know, we are not going to get those resources out there unless we cooperate. Cooperation is key, and one of the core components of the Paris Agreement is that the wealthier countries commit to helping those countries with limited resources to take effective climate actions. Now, that is what we have signed up to. But how do we do it? And how do we do it in the most efficient and effective way possible? That is what we are here to discuss. And how do we get all hands on deck? We obviously need to increase both public funding, and we have to get more private investments out there. We know that official development assistance, ODA, can only fill this much of the gap. I think the total ODA worth in the world is $180 billion US, and I was just saying that we are lacking 3 trillion. So that means we have to be smarter on how we cooperate, and we need to use the resources that we do have in a much more catalytic way than we have done before. So let me just mention some of the steps that we have taken from the Norwegian side in order to use our money in a smarter way. First of all, we have pledged to double our climate finance from 7 billion Norwegian crowns in 2020 to 14 billion in 2026 at the latest. But we are setting up some interesting mechanisms to get that catalytic approach that I was talking about. We've set up a climate investment fund, which is specifically designed to trigger and speeding up investments for renewable energy in developing countries. And we plan to contribute 10 billion Norwegian crowns that is about €1 billion over the next 5 years to set up the capital for that fund. And the most important aspect of that fund, of that mechanism though, is that we have designed that scheme so that one public crown generates 9 private crowns. And we are working hard to design and implement new mechanisms and new tools for mobilizing private money. I have tasked the Norwegian Agency for Development, NORAD, to identify those tools and help us to set them up. At the beginning of next year, we will launch a call for proposals for blended finance facilities for up to 250 million Norwegian crowns, and we are encouraging all investors working in the blended finance space, and particularly those with a focus on green energy in low and middle income countries, to participate and take part in that action. So with those tools available and other tools that we will talk more about later, we will be able to scale up our efforts and mobilize more of the finance needed. Meanwhile, we recognize that resource mobilization through lended instruments alone will not be the whole answers. We will need to continue to provide technical assistance, and we need to help developing countries with their framework conditions. We all know how important that is for private investors. So improving the framework conditions will be critical to reduce the risk, and may I say, even more importantly, the perceived risk, because we know that the perceived risk is higher than the actual risk in many cases. So I'm pleased to welcome several investors here today. It's great to have you here. I'm encouraged by the increasing engagement that we see by private sector. I meet them every day in Norway. Sometimes I say that, you know, we have reached a point where sometimes I feel that it's the private sector pushing the politicians, and not the other way around, as it was a few years ago, and that is great. It just means that the governments have to step up even further. So I'm very encouraged by that, but you also have a job to do as private investors, and that is to proactively go out there, get to know the context in the work where in the countries where you want to invest, because as I said, we need to reduce the perceived risk, and that can only be done by you going out in the field and actually trying it out. And no country can do this alone. We have some critical actors here in the room together. You know, I think we know what to do. We just need to bring the action to scale. And frankly, you know, we have no time to waste and no choice but to get this to work. So, you know, we just have to do it and get our acts together and get all hands on deck. So I'm looking forward to a fruitful discussion.
Thank you so much for that. And it's actually a really perfect segue to Joan Larea, who's the Chief Executive Officer of Convergence. Can we get Joan up online? Convergence has developed an action plan for, it's really a strategy to mobilize finance on both climate and the Sustainable Development Goals. So she's going to walk us through the state of play and some really thoughtful recommendations they sourced from across the private sector, from investors who represent over $3 trillion in assets, so people who know what is necessary to get them to move. So Anne, are you with us? And can you set the stage for the action plan?
Joan's unable to actually join today. Can you hear me, Julie?
We can't hear Anne.
Sorry, it's Chris Clubb actually speaking from Convergence. Can you hear me?
Yes, we hear you well. Go ahead, Chris.
Super. Thanks very much for the introduction, Julian. Unfortunately, Joan Larea is unable to join us today, so you're going to get me, Chris Clubb. Listen, I really want to start by thanking the Minister from Norway. I think, as she just mentioned, their commitment to mobilizing private investment through the call for proposals will be announcing early next year, and the Climate Investment Fund of around €1 billion over the next 5 years. These are the feedstock we really need to be mobilizing at private investment at scale. To address what Gillian said, we've got a huge SDG and climate investment gap in low and middle income countries. I'm going to start here with a slide that says scene setting for blended finance collaboration. If one looks at why we're all here today and why is this such an important initiative, the reality is the actual level of investment for climate and SDGs unfolding in low and middle income countries is probably around 20 to 25% of what is actually required. We have around a 3 to 3.5 trillion investment gap for all the SDGs, including around 1.2 to 1.5 trillion for climate objectives, Paris Agreement objectives. Now, when one looks at that large number, it isn't large relative to the total amount of global financial assets held by the private sector. There's around $410 trillion of global financial assets held by the private sector, but only around 4% of that is actually invested in low and middle income countries or emerging markets and developing economies. Now, there's an ambition within the climate finance world and the development finance world to use some of the resources, some which the minister just mentioned and Gillian mentioned, some of those resources with the intent of achieving climate impact and development impact, but also mobilizing private investment at the same time. The challenge we have is that currently, when we look at all the different sources of mobilization, there's probably around $48 billion a year being mobilized for all the climate and SDG investment needs. That's far too low. So there's an ambition of what can we do differently through collaboration and other activities to mobilize at a higher level. Next slide, please. Now, when one looks at the existing activities, the best data we have is from our colleagues at the OECD. Our colleagues at the OECD estimate, on average over the last 3 years, there's been around $48 billion of mobilization by the public sector development and climate finance. And that really divides into two worlds. The multilateral providers, for example, IFC is the largest multilateral provider. It's mobilizing around 11 billion of total investment for climate and SDGs. And then you have the bilaterals, including Gillian and her colleagues within the United States. They're regarded as the largest, and they're mobilizing 5.5. This is great work. All these individual projects and proposals are excellent. But in aggregate, at 48 billion relative to the needs of around 4.5 trillion, we're only really mobilizing around 1% of what's required. Next slide, please. Now, when one looks just at climate, the OECD also released a report very recently that looks at what's the level of actual investment being provided and mobilized by the public sector just for climate mitigation and adaptation relative to the $100 billion target that was set in Copenhagen in Mexico many years ago now, around 12 years ago. We're still not at that 100 billion. By the best estimates, we're up around 83 billion in total of investment that was provided and mobilized by the public sector. And that includes 13 to 14 billion of private investment. So once again, great projects, good activities, but certainly not at the scale required. Next slide, please. Now, why are some public sector resources required to really mobilize private investment? There's many challenges for the private sector to be investing in low and middle income countries, but by far the largest is this whole idea of country risk. When one looks at all the emerging markets and developing economies, or what the development world calls low income or middle income countries, we have a substantial challenge here. Only 11% of those sovereigns or countries are rated investment grade. Indeed, 76% of these countries are rated single B or lower. So these are what's regarded in the investment community as highly speculative. So essentially, we have a challenge that the underlying investment risk for climate and SDG investments in low and middle income countries generally are quite risky, indeed, are beyond the fiduciary and or regulatory obligations of many investors. So we have this big challenge of country risk and currency risk really dissuading investors from investing in low and middle income countries. Next slide, please. So Convergence has worked with USAID and other colleagues, including the Nordic colleagues that are presented here today, to really discuss over the last 6 months what can be done differently within the existing development finance and climate finance infrastructure to really move this number to a substantially higher number. And we've really agreed an action plan that we actually released today on our website that we'll be following up next week, presenting to the OECD, about what can be done differently with existing financial resources to allocate some climate finance and development finance more strategically, more intentionally, to create the investment assets that meet the fiduciary and regulatory obligations of investors, while at the same time ensuring from a development and climate perspective, they are channeled to high priority projects in low and middle income countries. So a group of organizations listed here over the last 6 months have worked on an action plan that we're releasing today on our website. And next slide, please. At the core of this action plan is 5 pillars of activities and 2 complementary activities that in aggregate would lead to a substantially larger level of private investment. By our estimations, we think that we can move that private investment mobilization from around 48 billion a year up to around 286 billion a year if we take some of the existing climate finance and development finance funding from public sector organizations and philanthropic organizations and tweak it with the intent of using the most effective and efficient blended finance vehicles and innovative finance vehicles that have already been deployed over the last 12 to 15 years. We need to identify them and really ramp them up. And at the core of this is this idea of what we're discussing here today. Number one is what the minister from Norway just mentioned, a commitment from NORAD and Norway to be allocating some of their international development resources towards mobilizing private investment to the SDGs and climate. And number two, there's a lot of great activities that are unfolding, but they're all unfolding, unfortunately, in a fragmented, siloed manner. We need to bring together these scarce resources in a much more collaborative way. Collaboration amongst the development agencies, but also collaboration with the private investors. We need to hear from the private investors, and they've participated in this action plan, of what types of risks can they bear that are fiduciary and regulatory, and how do we actually create those investment assets. Next slide, please. So with that, I encourage everyone to reach out to the Convergence website where you'll see this action plan. And very, very much thanks to Jillian and our colleagues at USAID for really commissioning this work to get it done. And it's really a good roadmap that's very practical and solution-oriented, using existing examples to allocate some of this funding to the best global proposals that will mobilize more investment to low and middle income countries for climate and SDGs. So with that, I pass it over to you, Jillian.
Thank you so much. So we are going to move it right along. We're going to hear from 3 of our Nordic allies now, and then we're going to move to hear from the private sector and government. So I'd like to welcome to the stage Thomas Anker Christensen, the Climate Ambassador from Denmark, Ulrika Akesson, the Climate Ambassador from Sweden. I think she's joining us virtually. And Jan Wahlberg, Climate Ambassador, Ministry of Foreign Affairs from Finland. Just come on up to the stage and grab a mic.
Stepping in for Thomas. My name is Adam Split. I'm the Deputy Director for Climate.
Okay. Adam Split is stepping in for Thomas. He's the Danish Director for Climate. You each have a mic. If the light is green, it's on. And why don't we kick it off with you, Jan, and then you, and then we'll hear from our colleague. Perhaps we could see our colleague virtually while this is happening, if that's possible. Okay. Oh, you've got slides. Never mind. I think we're hearing from Jan. Who's going first? Jan?
I can do it if you want to.
Okay, sounds good.
Okay, so my name is Jan Wahlberg. I'm the Finnish Climate Ambassador, and happy to give you the Finnish perspective to this topic of the day. As the Norwegian minister mentioned, it's a finance day, and as you know, Finland co-chairs with Indonesia a coalition of finance ministers for climate action. They are doing a lot of things, especially related to forest and biodiversity today. So I think that's one point I'm proud of is the link of COP27 and COP15 and what they are doing. And there also we need private money. But I will focus on kind of Finnish solutions, what we have been doing in practice, state guarantees, concessional loans, and impact investments. If I start with state guarantees, we have a National Development Finance Institution called FinFund, and over a decade now already they have state guarantees, and the current commitment is about 150 million euros. It is to enable companies to take risks and go where the positive development impact is high, even if there are risks present. And the level of guarantee is about 40 to 60%, depending on the nature of the project. And this has enabled FinFund to really refocus on LDCs and SIDS, because if we look back 10 years ago, their portfolio was 68% LDCs and SIDS, and now it's almost 100%. So we can see that there has been a concrete change. And it's been a very low cost for the government. There's only been 2 failed projects where we have needed to bail in, so it hasn't been expensive for the government. And also it has not weakened the ability to raise private financing. And there are many examples of that where we can talk later perhaps, but I'll just mention one company just raised 75 million with a sustainability-linked bond and works as an advisory to a private impact fund investing in emerging markets. And that's been done without any harm of having this sovereign. And then I'll go to concessional loans and impact investments, and they have been in our toolkit since 2016. And the investment portfolio is 730 million euros nowadays, so it's very significant between these two. The development impact remains the priority driver, but we still expect some financial returns on this, even if they are modest. And we focus on climate and Africa and integrate gender into these projects. There's the largest one and we are the largest investor in the first ADB Ventures Impact Fund under the Asian Development Bank. And there you have scalable technology startups linked to gender and climate. And we are working in another one which will be on debt instruments and private sector. So I do think that with these instruments we can take them to the kind of climate diplomacy fora. Finland is a member also on Champions Group on adaptation finance, and we have made a promise as a group that we will gather the missing 40 billion for adaptation finance, and it cannot be done by traditional government funding. We need private sector, we need these innovative instruments. I think I'll stop here and thank you very much.
Yes, thank you so much. You're up next.
Thank you so much, Gillian, and of course, thanks to my Finnish colleague and Norwegian minister for putting out so nice, and obviously also to Chris Club and Convergence for setting the scene on this extremely important topic, because I think private sector financing is absolutely key if we are going to succeed on decarbonizing our economies, reaching our adaptation goals, and so on and so forth. Can you hear me? So try with another mic. Can you hear me? Excellent. But just before I proceed, let me start with a disclaimer. Denmark had parliamentary elections on the 1st of November, and a new government is currently being formed, so there are some limitations in terms of what I can say on the forward-looking perspectives. But when it comes to private sector financing and the need for investments in climate and action, this is obviously especially needed in developing countries where we have much more information gaps, we have perceived credit risks, we have less investor appetite, and those risks we only see increase now with geopolitical context and increasing inflation and debt levels. But that's why blended financing is only becoming so much more important. And I'm very happy that I've brought two cases on the Danish experience here today. A new sovereign guarantee instrument that we launched this year, and another, our largest instrument, the SDG Investment Fund, we launched in 2018. This year, Denmark introduced a sovereign guarantee instrument budget frame of approximately $250 million to mobilize private capital for development and especially on climate financing. and I think that's on the upper part of it's on the upper part of the slide. We have done this in collaboration with our Swedish colleagues, and we are really building on the experiences from the US and from Sweden. And we believe the guarantee instrument can really leverage private financing, and the beauty with the guarantee instrument that it can be applied in such a wide, in so many ways. It can be applied to local financial institutions, providing loans to energy efficiency or climate smart agriculture, and to larger energy funds. So it's really a flexible instrument. We have the SDG Investment Fund from 2018. That's really a collaborative financing instrument together with the government, institutional investors. We have some of them sitting here in the corner. And also, of course, our DFI IFU. So that fund has 60% institutional capital and 40% public. And that's really the way we can de-risk and attract institutional investors into more risky markets. It has invested in energy in Malawi. It has invested in food storage in India to reduce food loss, and also to provide some climate adaptation when it comes to food production. And we are really starting to see tangible results now. The fund has provided investments that has created 3.5 gigawatt of renewable energy, and it has also provided access to clean energy for 2.5 million people. So I think the blended financing mechanism, where we attract institutional investors, are really starting to prove its value, and we look forward to see if we can establish a successor to this SDG fund next year. Hopefully, we'll see. Hopefully, we have a new government soon. We look very much forward to continue the collaboration together with our US friends, together with our Nordic friends, and let's see what we can manage to achieve ahead of COP28 next year. Thank you so much.
Thank you very much. Ulrika Eikesen, are you with us from Finland?
Yes.
Excellent. Over to you.
Hi, everyone. Can you hear me?
Yes. From Sweden.
Good.
Sweden, yes.
Yes. So my name is Ulrika Åkesson. I'm working as a lead policy specialist on environment and climate change at SIDA in Sweden. Well, thank you very much to all of you setting the scene for this important topic that we are discussing today. For us at SIDA, blended finance is a key element to address the financing gap for climate action in developing countries. And we all know that, and you've said that already, that ODA is not enough to address and adapt to the already devastating effects of climate change. And in addition, donors are not coordinating, I think, sufficiently among themselves, and there is a big potential to unlock significant additional capital by collaborating with other agencies and coordinating the use of our resources with the objective to mobilize additional capital for implementation in countries particularly vulnerable to the effects of climate change. And I also believe that climate outcomes depends on policies and investments made in all sectors, including, for example, energy and agriculture, transportation and urban development. And therefore, we believe at SIDA that it is critical and efficient to ensure that environment and climate-related risks and impacts are considered in all policies and investments. And that said, this does not exclude the importance of promoting investments that primarily target climate adaptation and mitigation, or supporting the development of regulatory frameworks for sustainable finance. And since 2009, Sweden has an ordinance for financing of development loans and guarantees for development cooperation. And this provides a lot of opportunities to expand and leverage available resources for development by linking public measures with market finance. And SIDA is very much committed to contribute to catalyzing finance for climate action in developing countries. And we work strategically to this and through various tools in combination with specific initiatives to enhance the effectiveness and outcomes of applying these tools. For example, we provide guarantees that stimulate mobilization of both private and public capital, including partner countries' domestic capital. And we help lenders deal with risks by ensuring eligible projects against losses relating to the different market risks. And a common setup is that we cover part of the loss if the borrower fails to repay the loan to the bank. We also mobilize climate finance through other instruments such as public-private development partnerships and challenge funds, in which funding from CEDA enables mobilization of private capital. And one example is that we support the Global Innovation Lab for Climate Finance, an incubator which works with identifying and strengthening innovative financing instruments that mobilize capital within climate finance, including sectors such as sustainable cities, renewable energy, and sustainable food systems. And we also conduct dialogue with private investors within the networks as global investors for sustainable development, as well as Swedish investors for sustainable development, to connect them with initiatives and further promote investments towards climate adaptation and mitigation. And just finally, CEDA has high ambitions to utilize ODA in a strategic way that mobilizes capital for implementation of all SDGs, not least goals related to climate change and for the benefit of people living in poverty. And we also aim to scale this up further by integrating mobilization of capital and also strengthening of institutions in order to do so into the core of operations, and also exploring opportunities to maximize the outcomes of mobilized capital to the benefit of the most vulnerable. And very much looking forward to do so in cooperation with our US colleagues and Nordic colleagues and other donors as well. So thank you very much.
Thank you so much, Ulrika. We wish you were here with us. But now we're going to hear from the private sector. We've been talking a lot about you, and we'd like to hear from you now. I'd like to welcome to the stage John Johnson, the CEO of PKA. PKA is actually one of the largest pension funds in the world, and notably the only Danish financial institution that's a part of the Glasgow Financial Net Zero Alliance, if I'm not mistaken. And Jay Collins, who is the vice chairman of Citibank, and very involved in the sustainable investing dimension of the work they're doing. So let me turn it over to you. I understand you've both got some thoughts for us. Thanks.
Okay, that's better. Can you hear me now in the back? I know there's a lot of sound there. So you've had a lot of numbers thrown at you today. I'm going to simplify a few more down for you. When we were in Addis Ababa and announced the whole SDG funding program, if you remember, people talked about billions to trillions, right? And one of the things we talked about in doing that was blended finance. Well, I can tell you right now that we are not blending to scale. We are blending small, project by project, and so we've got to break some glass in order to blend more. So let's talk about that a little bit. First of all, we have some of the most forward thinkers here today in blending in the ODA space, the Nordics, of course, USAID, others. But overall, when you look at ODA's budget in total, and I think that was talked about, I think convergence in city can barely get to 2%. I'd be surprised if it's that. What does that mean? That means that grant money goes out, think about the math of this, it goes out as a grant, highly additional, right? Highly development oriented, but it's gone. You got to give it again next year. Now imagine that I put $1 of that grant money into a structure upon which I can put 2 or 3 of a concessional loan and then 7 of the private sector. So let's just say all in all I mobilized 10. Well, if we're going to get to, I just came from Climate Finance Day and heard all kinds of different trillions of numbers of what we need. Let's just say it's trillions. But it's so far beyond what we're funding now, it's crazy. So the public sector right now with COVID, with food crisis and energy crisis, there's no way it's doing it alone. So the only way this really happens is for the private sector to be catalyzed, mobilized, risk mitigated. Those are all the terms you'll hear off of the back of that layer of the public sector. Now, very interestingly, when you hear about the 100 billion, and again, we just talked about this in the panel this morning, the OECD has not made good on that commitment. And there is a new collective quantifiable goal negotiation going on in the UNFCCC right now about how big is that next number? What do we think about that next number? Well, that next number, if it does what the first 100 did, and by the way, it didn't get to 100, so let's say 70 billion of it is public sector, 20 billion of it is private sector. So Peter Sullivan, who does this for a living in Africa, if I said to him, how about if I gave you 80 billion, no, let's just say 80 million for a project, 80 million of official sector money, and put private sector money on top of it. And he came back and he said, I'll add another 20. I'd say you're joking. In fact, he'd never do that, because he would be saying, I would be grabbing capital from the official sector that mobilizes. ODA, philanthropic grant, all of that money is a base layer upon which the private sector can come in and do what it does. But right now in our 100 billion, it's a tiny, tiny amount. So, two things for you. One is, in Bali, and between now and the IMF meetings, there are going to be intense negotiations ongoing with the multilateral development banks about how much risk they take and how much capital they put toward climate. They're right now going to put more capital and not take more risk. And when they don't take more risk, we will never get to the kind of numbers that everybody here wants. So they've got to take more risk. You heard convergence, and so I don't have to say it. Final point. Convergence showed you numbers of this 130 GFANZ pot of gold. All of the banks, insurance companies, and pension funds in the world that are constructive, committed players to climate change. Their fiduciary and regulatory paradigm are not allowing them to take emerging market, non-investment grade risk. So you have to mitigate these projects up into a zone that they can take that risk. Because right now it's 4%, and that's invested already. So when you look at the churn, it's a tiny amount. So you have to ask governments official money to mitigate the risk better. And that's blending in simple terms. That's what we call blending. And we need the structural capability to do that. So, over to you, my friend.
Thank you very much, and I think we're very much down the same line. And dear ministers and esteemed colleagues, thank you for having me here today. PKA is just Danish pension funds, for sure, but not in the world, but thank you very much. We have already now invested 13% of our assets in the green transformation, wind farms and solar and so on, and about 10% of that is invested in emerging and developing economies. So we do that through the IFU vehicle we just heard about before from the Danish Foreign Minister's department. So we very much believe that if we have to extend that further, I fully agree with you, we have to go to blended finance some way and find structures. So, I mean, the Danish state supports IFU, and by that, we as a private sector and a financial institution, a pension fund, can actually invest alongside with the Danish state. But if we want to take this to the next level, we have to get the MDBs and the FDIs to be able to take some of that risk, and that is back to some of the donor countries and the countries behind these banks to actually change the mandate of the banks to be able to take some of that risk. And if that's possible, we will be ready with more money and more investments. I think maybe the announcement we had just yesterday night at the Egyptian Pavilion, where there was announced a 15 billion investment in Egypt, covering both, climate, adaptation, and of course also energy as part of it. And Denmark was part of it with $100 million US dollar or euro investment through IFU, and also we are a small investor in that. And I believe that's an example to follow, and it could be something that we could copy. So I think that's just the way forward, is to get the MDBs and the FDIs to actually move in. And then I'll just add another thing, and one of my sort of personal ambitions for this COP is to talk to philanthropy, because I think they can move fast. They are fast movers, and they can also do blended finance with us. And I talked to some yesterday, and they are very interested in that type of investment. I think that is very interesting. That's a new factor I haven't thought about before, and it's a very much a factor that can move fast. And I think maybe we will be there with the philanthropy money as taking a first risk before we get the MDBs and the FDIs to be ready for that. So thank you very much.
Thank you very much. Hopefully you can stick around. If we have any extra time, it would be great to engage you. I'd like to invite several more participants to the stage. Anna Amambia from Kenya, representing the Ministry of the Environment. Thank you so much. Nick Holder from Prudential Africa. And last but not least, do we have Simon here? Simon from GIAP? Or do we have another representative? Oh, you're here. Good. Excellent. Welcome. Welcome to the stage. So let's make sure everybody has a mic. So I'm going to start with you, Anna, because we've been hearing a lot from those of us in the global north, and it would be really good to get your perspective from Kenya. There's a lot of talk about climate finance, and I know Africa is very hard hit when it comes to the climate crisis. I actually just returned from Kenya, and the impacts of the drought were just very obvious. You could see and feel the hunger, so I want to acknowledge what you're experiencing. Talk to me about what it's like from where you sit. What challenges do you face in bringing the finance you need to the table, and what opportunities do you see in these public-private partnerships we're describing?
Can you hear me now? Okay, thank you very much, and good afternoon, ladies and gentlemen. Nyatichio Mambia here from the National Environment Management Authority, standing in from the Principal Secretary, Ministry of Environment and Forestry from Kenya. Thank you for the invitation. And on behalf of the Government of Kenya, with regards to the invitation, I wish to just share our thoughts with regards to the topic for today on climate finance. Just for introductory purposes, Kenya is participating in these negotiations, including on climate finance, and also as a country we've been able to partner with quite a number of development partners in addressing our climate change action plan, which is quite explicit on both adaptation and mitigation actions, and also with regards to addressing issues on how to enhance access to financing. More specifically on our NDC, as a country, we have pointed out that we need to mobilize $63 billion to implement our NDC, the updated NDC, and that will cover both adaptation and mitigation actions. However, we have challenges with regards to mobilizing sufficient resources, more specifically for adaptation. For instance, we require to address the emerging issues such as the current drought we are facing, and therefore resources have to be addressed to address the immediate needs, while at the same time have to address development objectives and also implement the NDC. So there are quite a number of significant disparities in the current flow of financials between mitigation and adaptation. Generally, as like all developing countries, we have a lot of engagement on the mitigation side and less interest, especially from private sector, in addressing the adaptation financial flows. Further, in terms of the complexity and rigidity of climate finance access requirements and the procedures that we have to be able to comply with to access the financing. For example, our country, my organization, which is the Environment Agency, we are accredited as the national implementing entity for the Adaptation Fund and also the accredited entity for the Green Climate Fund. We are also implementing the Global Environment Facility support, and all this have very stringent access procedures which can often delay financial flows, and therefore the blended finance approach is one of the welcome opportunities which we are pursuing. The National Treasury, through the Green Climate Finance Unit, is involved in quite a number of financial flow access, engagement with different partners. Of recent times is with regards to a local approach, which is named as the Financing for Locally Led Climate Action, which has managed to mobilize resources from the World Bank, and also the government on its own has significantly contributed to be able to flow resources to the local level. So in terms of the opportunities, of course, the blended finance would be one of them. And also preparing portfolios, as I saw in one of these presentations, that the need to have ready portfolios with what should be supported is key to ensure the access of finance and also implementation at the local level. Thank you very much.
Thank you so much, Anna. Nick, I want to turn to you. I'm sure you had a lot of things to say. I wonder if it's possible, in the context of your remarks, if you could comment on the investment gap for adaptation. You know, there are opportunities in the areas of insurance, drought-tolerant agricultural products, infrastructure, irrigation, but we know there's just less than 2% of the private sector investment flows towards adaptation. So I'm curious how you see that. I'm also curious about the pie chart, which of course demonstrated the vast majority of the countries in the terrain we're talking about are rated B or lower. So to the extent it's relevant to what you wanted to say anyway, would love to hear about that, but thanks for coming, and over to you.
Can you, that's better, you can hear me. Thank you very much for welcoming me here today and giving me the opportunity to comment. I can probably talk more about investment and less about adaptation. The insurance company I work for, Prudential, primarily insures people rather than things. But what that does mean is it accumulates assets. A lot of what it does is to take relatively small amounts of savings on a regular basis, monthly or annually, and converts them into longer term savings in much larger quantities and amounts. And we do that in 23 countries across Asia and Africa. And I think a key difference from some of the other private sector firms that we've heard from is that we look to invest most of those assets locally in the country that we operate in. So this means that we have to work very closely with the governments and the capital markets in markets like Kenya, like other countries I've lived in and worked in Asia, like Thailand, Vietnam and Indonesia, to help them deepen and strengthen their asset management, their fund management and their capital markets. We always work in partnership with the countries that we operate in, and we're looking to develop a broader financial set of instruments that can be part of a virtual circle of investments, encouraging further investments over time and growth. And those investments can really be invested in a number of asset classes, but increasingly we look towards infrastructure, because infrastructure projects can be very long term, and a lot of our liabilities are very long term. We're very passionate about engaging, not divesting in a lot of the markets we operate in. That may actually be the only option. We're really advocates for locally suitable targets, data, rules and regulation. We're very keen recently to get quality investment flowing into emerging markets and supporting the energy transition. And that's why we're particularly keen and interested in blended finance. As we've heard, there are quite a lot of initiatives underway. There's a lot of thought in this room about how to expand the scope of blended finance. And there's a couple of those initiatives we feel are more pressing. First one, just to echo some of the previous speakers, is that we're really looking for greater scale in concessional capital, in supporting blended finance, solutions that de-risk investments, not just on a project-by-project basis, but on a much larger scale, both to make it easier to invest and to ensure diversification. If I can give an example from Vietnam, we supported a solar panel project there for US dollars 14 million. Relative to the size of our life insurance funds in Vietnam, that's a relatively small amount. It required a very large relative effort in terms of due diligence, in terms of preparations, in terms of looking for certification. It was a good thing to do, it was the right thing to do, but it's not yet scalable. I think the second thing we're looking for is a greater availability of support from multilateral banks, really looking for them to expand their activities, to expand their scope of financing, perhaps to look at things like securitization of their assets, moving them off their balance sheet. Life insurance companies would be interested in investing in those securitized assets, and of course it would provide more capital as well that can be used to fund more projects. Finally, we're really keen on guarantees provided by multilaterals or governments. Very often that can make the difference between whether we can or cannot invest in a particular investment for the environment. At all times we have fiduciary duties to our policyholders, and sometimes it can be hard to put those in place or to meet those requirements if we don't have a suitable guarantee. We're not experts in project finance, we are experts and we often invest in corporate bonds. Probably worth mentioning as well the currency of the investments. A lot of the people who've spoken to you already, they're looking for hard currency investments, they're investing from overseas. But as a life insurer operating in these markets, we actually want local currency investments. So if we're forced to invest in dollars or euros, it means there's a currency risk which might not be in the interests of our policyholders. If I can just end on a positive, I currently also am lucky enough to live in Nairobi. I mentioned I've lived in 7 countries across the world, in Asia and in Africa, including countries like Vietnam and Indonesia. And I see the financial markets changing very rapidly in all of these countries. And we're really keen to be part of the story as they change their regulations, law and domestic policy to support investments in the transition for the betterment of the environment in all the countries that we operate in. Thank you very much.
Thank you so much. I've just been warned that we've got about 6 minutes left for the panel, and we want to hear from you, and we also want to hear from my colleague Stig from Norway. So let me turn it to you, Simon, because you're in such an interesting position, having come from the private sector and now leading the Global Alliance for Energy, People and Planet, which is really focused on advancing the renewable energy transition, not just in Africa, but in other places. We're proud to be partnering with you through Power Africa. So what are your observations from that perch, or more generally, given your prior experience?
Thank you so much, and thank you for including us. conscious of time, very quickly, GAP, the Global Energy Alliance for People and Planet, is a new organization, and it is created by big philanthropy to be a platform working with all others, private sector, governments in the emerging and developing markets, the development sector, to do a few things. Number one is to bring far more philanthropic capital into this space. There is not nearly enough philanthropy capital in the climate space and the energy space. Number two is to help being an agent to do things differently. We feel that quite a lot of sort of business as usual is simply not working. So how can we all innovate, create new models, unleash more private capital, and what's the role of philanthropy in that? There are a few sort of points of principle we feel. The quantum of capital is needed, but there are so many other market failures. And so we have a particular focus on the other market failures, trying to help resolve those to unlock more capital. So we work closely with governments on their own capacity in enabling environments. We work with the private sector on trying to de-risk currency, trying to reduce the costs of renewable energy. Because we see that a clean energy solution, that is economic development. It's not one or the other. And once we can make clean energy a core part of a government's economic plan, part of the jobs plan, part of the poverty plan, then clean energy becomes the integral part of development agenda. What are some of the other areas that we're trying to assist with? It's also helping governments to play their part, because we got some competition on the noise here. We feel that each component needs to play their part. There's been a lot of talk about the multilateral banks and whether they should take more risk and could take more risk. I'm curious that it's often talked about a risk issue. How often do we talk about the cost of not doing this? And I would argue the cost of us not fixing the climate crisis is way larger than the cost of fixing it. So the whole attitude to risk, we feel, needs to be rethought around the development finance space. And then secondly, with the governments themselves, we see a lot of private capital available, including what we just heard from Prudential, but it does need that enabling policy environment. So we ourselves as philanthropy work with governments trying to help the regulations be more clear and certain and long term, try to help the sector policymakers put in place capital friendly, investable friendly policies, and crucially about implementation. With all of this, we can have the discussion of the problems, we can have the discussion of what needs to be done, but we have to get on and do it. And it won't be perfect, so we're a big believer in innovation, trying, making some progress, creating some proof points, and then we all learn from that. So a few extra themes just to add to your discussion.
Thank you so much, Simon. So we're going to wrap with a few words from Stig, and I think your segue is perfect because you're talking about action, and Stig's going to throw down the gauntlet. So Stig's the Director of Climate and Environment at NORAD, which is Norway's largest development agency. He's also got his own experience in the private sector, served as an ambassador to Indonesia, and my favorite accolade is that he's a 6-time national judo champion, and he most recently competed in the Masters division and did pretty well. So I think if he's an expert in judo, he should be able to help us resolve this problem. If you wouldn't mind, clear the stage for Stig, and we'll hand it over to you.
Thank you so much, Gillian. And thanks to all of you for bearing with us and with the sound issue. I hope you can hear me okay now. First of all, really thank you to Convergence, thank you to USAID for gathering us here today. I think it's been a really interesting event. And I think we've heard several times, it's about scale. Yeah? We need to get things to scale. And in order to get things to scale, we need to work together. I think there's no doubt about it. I'd also like to compliment our Danish friends a little bit, because I think one way of getting things to scale is also by learning from each other, because it is always a little bit easier to build on existing models. So scale is one issue. Then there is, of course, the issue of there are areas where capital does not go at all, or almost not at all yet. We have issues when it comes to adaptation. We have issues when it comes to nature. I think we need to resolve those. There is also jobs to do in terms of getting the projects ready. So good old technical assistance or preparing projects is also still needed, and I think we need to scale that as well. I think it's clear we need to work on the risk issue, both in terms of alleviating risks, working on perceived risks, and also being able to put risk capital together at scale again. This is, of course, just a first step. We are happy to announce that we will, before the next COP, before COP28, together with USAID, we will at least collaborate on one investment vehicle. We will work hard also to get other donors, others to join. We're working very closely with our Nordic friends. We will continue to do so in this circle. So I think that is a commitment we have until the next COP. Let me just check that I didn't forget anything important that Ragnhild, my colleague, told me that I have to say. Yeah, and we also encourage, of course, our private sector friends to join us in this endeavor. Thank you so much to all of you, and thank you, Gillian, for inviting me on stage.
Okay. Thank you all so much. So Stig has said it, you heard it here. We have made a commitment between now and the next COP to try to establish a vehicle with a capability of catalyzing at least $1 billion. We won't have catalyzed $1 billion, but to establish a vehicle that can really catalyze that finance at scale by the next COP. So we've got our work set out for ourselves. But this whole event today began with a conversation at the last COP, and I think we've really made a lot of progress in terms of collaborating between the US and the Nordics, and very much welcome other private and public sector allies. I wanted to say, I know there's another event forthcoming here, but the Danish pavilion has invited us to network there if we would like to. They're wrapping up another panel by 1:15. So if people do want to stay in the midst and network either here before they kick us out or there, you're most welcome to. Thank you so much to all of the panelists and to all of you for coming. And I wanted to announce also, this is exciting. You see here on the screen a new initiative by USAID, the Climate Finance Investment Network. This QR code will take you, it's a one-stop shop to get access to a conversation about private sector engagement and co-investment with USAID. And we've got people working with us who are accustomed to working with the private sector and who can hopefully advance the conversation at the scale you're accustomed to, because that's not always easy inside government. So please do grab the QR code and be in touch with us. And congratulations to Sashi for all of the work you did to get that off the ground. Thank you so much.
who will give some of their thoughts and reactions about the impact of the energy crisis. Good afternoon, everyone. Thank you very much for joining us at this, the launch presentation for the World Energy Outlook, which, as many of you will know, is the flagship publication of the International Energy Agency. It's great that so many of you can join us. And without further ado, I'm going to hand the floor over to our Executive Director, Dr. Fadi Barol, to give us some of his thoughts on the launch of the report.
Thank you very much, Christoph, and very many thanks to all of you for being here. It is very loud, I see, but I will be even louder that you can hear me. So many thanks to Madam Minister. Thank you very much, Madam Minister, being with us today. And we are looking forward to hear from your great experience in Uganda. And we are also very lucky to have another distinguished Minister of Energy of Oman. Thank you very much, Mr. Minister, for being with us. Another very progressive country in this region. So, dear colleagues, I will say just a few things about the World Energy Outlook. So this is the, as many journalists describe this, this is the report that the world leaders put next to their bedside table. It has a major impact in terms of decision making of governments, businesses, and others. And as such, we have a huge responsibility. And my colleagues like Christoph McGlade and the team working across the year to put this wonderful report together. Now, there are many findings in the report, but I will tell you only one of them. I asked Christoph and his colleagues a question beginning of the year. This crisis, global energy crisis, is it going to slow down or accelerate the clean energy transition? This is a question that we all wanted to ask and wanted to hear the answers. And when I look at the World Energy Outlook, the answer is clear. Very clear. Even though we are going through a major energy crisis today, the responses governments are giving to this crisis are going to accelerate clean energy transitions. And we are seeing every single day the data which do support this argument. At the IEA, we are very lucky. We have all the energy data, country by country, project by project, sector by sector, at our fingertips. And when we look at them, we are seeing the clean energy transitions are speeding up. Why? For the three following reasons. One, many countries put a lot of money, I am not saying about the thoughts, strategies, plan, money, cash money on the table, as they see clean energy as a means of having energy security. So today, for example, in Europe this year, we are seeing the biggest record ever in terms of renewable installations, and the single most driver is energy security. So energy security is the #1 driver. Second driver is the climate commitments that the countries have. 2050 net zero and beyond. I was very happy to hear from the Minister of Oman today the details, the roadmap of Oman and the 2050 net zero, but more than 100 countries have these commitments. So this is the second driver. And the third driver, many of us don't maybe realize, but it's a very important one, It is the driver of the industrial priorities. Countries do not want their industries to fall behind other countries in terms of clean energy technologies. It can be hydrogen, it can be manufacturing of batteries, it can be electric cars and others. Now, when we look at the clean energy investment, this is the only data that you can decide whether or not the clean energy is growing or not. We expect clean energy investors with the current policies, to increase by 50%, 50%, only with the existing policies. Why it is happening? I tell you, one of them is United States. Inflation Reduction Act is a big game changer when it comes to the world's fight against climate change, because United States is giving huge amount of incentives to clean energy technologies ranging from renewables to hydrogen, from nuclear power to carbon capture and storage. In Europe, there is Repower EU. In Japan, green transformation of Japan. But all the countries are pushing clean energy investment stronger. But is it enough to reach our climate targets, the current trends? No. I give you one, to put this in a context, what needs to happen. Many things need to happen, but one single thing to reach our net zero target, as it is discussed now. Today, the world puts $1 for fossil fuel investments and $1.50 for clean energy investments. So $1 for fossil fuel, $1.50 for clean energy investments. If we want to reach net zero by 2050, this $1.50 needs to be $9. So 6 times increase. Whether this will happen or not, we will see, but there's a strong push here, and I would perhaps finish by saying that in terms of getting the $9 from 1.5 to 9, I don't think that the advanced economies will face huge challenges. The challenge will be in the emerging countries, whether or not the capital and the projects will meet. Here, there is a need for the advanced economies, international financial institutions, therefore, to support the emerging countries. One of the conclusions of the World Energy Outlook, the flagship publication of the energy world. So with this, I will give back to you, Christoph.
Thank you very much, Dr. Barol. I'd like to now immediately hand the floor over to Madam Minister, Minister of Energy and Mineral Resources in Uganda, to hear some of your thoughts on what Dr. Barol has mentioned and how the energy crisis is impacting Uganda. Thank you.
Hello. Thank you very much. I want to recognize my colleagues, ministers of energy from Oman, the host minister, if he's present, my brother, CEO, International Energy Agency. I bring you greetings from Uganda, the pearl of Africa, gifted by nature. Uganda's journey into the energy transition has been slow but sure. We started by generation of 100 megawatts in 1986, up to today, where we have 1,400 megawatts as generated capacity, installed capacity. And our energy mix is comprised of hydropower, 90%, and only 10% renewables. We are implementing an energy integration as we walk the journey of energy transition. Uganda's energy crisis is not different from other African countries. And this energy crisis might be different from the European energy crisis, whereby right now Europe is planning about how to go about their winters without enough gas. The energy crisis in Africa is how to reduce cutting down of trees in search for charcoal and firewood for cooking. That has always been our crisis for a long time. So the global energy crisis is helping us to be understood as Africa, that we have that crisis of stopping cutting down of trees, which reduces on the carbon sink. So the question that was put, whether the global crisis is going to go to see an enhancement of renewables, I can say I agree with you. Because the world has spoken, the climate is on us, every corner of the world has suffered. Whether you have been emitting or not, you have to respond to climate change. But the issue is, how are we going to respond? Are we going to see a one-size-fits-all agenda? Can we look at every continent and face the challenges that we have? Renewable energy is very good. We have solar energy. We have islands where we have mini-grids, and therefore we need investment in the mini-grids. We have identified the potential of more than 2,200 sites as mini-grids for renewable, for solar energy to be specific. But we can only develop 50 out of the 700 that we planned. So we have that potential where we need investment. But the question is the investment affordable? Is the money affordable? So that we can see affordable clean energy. Without affordability, you will take power to the people and they will resort to cutting down trees. This is Africa. So I would like us to look at Africa, Africa's perspective, where somebody will not freeze because of lack of gas, but will be dangerous because he will cut down the trees.
I cycle about 850 kilometers over
So,
those mountains behind me, the Jura, all the way to London, carrying a letter signed by organisations representing about 45
we are likely to compete. But it is not a crisis. We just have to tune ourselves to the stage, focus on the stage. I was talking about understanding the challenges that Africa faces. Whether we plan to stop investment in fossil fuel, countries will remain in darkness because fossil fuel has been a source of revenue for many countries, for many cities, which have turned out to be the world's energy city. They got their investment from fossil fuel. So what we have to do as developing countries is to make sure that we don't develop our natural resources the way other people have done it. We have to be responsible. For example, in Uganda, we have laws that do not allow venting of gas, flaring of gas. We have to think about technologies that can capture carbon so that that carbon can be utilized somewhere else in beverages probably. So in Uganda and in Africa, we just request to be given an opportunity to develop our natural resources, integrate the energy system, use the minerals that we have to support the power sector. But we must work on infrastructure, and the money from electricity infrastructure is supposed to be gotten from the natural resources. So separation of investment and discrimination in investment towards fossil fuel is not going to be an answer. We have seen a return on usage of coal in Europe because of a problem. So separation is not going to be an answer, but new technology is going to be an answer to make sure that we capture carbon, to make sure that we utilize the technology in renewable. I welcome you to Uganda, the Pearl of Africa. We have incentives for investment. We are good people, welcoming people, warm people, and please find time to come to the Pearl of Africa. Thank you very much.
Hello? There we are. Thank you very much, Madam Minister, for those really inspiring and important words. I would like to now hand the floor to our Minister who has just joined us, His Excellency Minister El Molla, who's going to speak. Okay, certainly. No problem at all. I'll then hand the floor over to His Excellency from Oman to give some reactions and thoughts on how the energy crisis is affecting Oman. Thank you.
All right, good afternoon. I'll try and compete with the other door, so I'll be a little bit loud. Let me take a slightly different spin to Her Excellency. First of all, thank you very much for inviting me to this distinguished panel, and Dr. Fatah, thank you very much for extending that invitation. We did have a very interesting discussion this morning. Last week, I was talking to some friends from Thailand. So we were planning for an event this summer that will take place in Thailand, and his question was, do you want the city, do you want the beach, or do you want the mountain? And so my response was, why do I have to choose? I want them all. I want the city, the beach, and I also want the mountain. Of course, he immediately said, you mean you want to stay in Muscat? Yeah, that is not the case. And he was able to find a place. Now, the moral of that story, beside breaking the ice, is really to say the world energy transition is also going through similar dilemmas. We want affordable energy for everybody. What's happening in Europe today and really across the world is a continuous reminder that if energy is not affordable, alternatives will be sought. And we know what happens when we start looking for alternatives. So affordable energy to everybody, I think, is absolutely a priority for all of us. And the second one is sustainability. There is no point providing energy for half a day or for a week. The world and the customers, they need energy continuously. They need it in the morning, they need it in the evening. They need it in the summer, and they need it in the winter. It doesn't matter what the weather conditions are, you need to continue supplying energy to everyone who is consuming it. And the last one is clean. It has to be clean energy. And that's the dilemma that we need to start working to find a balance between affordability, sustainability, and cleanness of the energy that we supply. Now, of course, Oman is an oil and gas producing nation. We've depended on it for quite some time. And the energy outlook from IEA is also reminding us that oil and gas will stay with us for quite some time. We're not going to be turning the taps off or switching the wells that we've drilled off anytime soon. But we need to do it responsibly. We need to go back again to the way we do business and extract oil and gas and make sure it's extracted in the most clean possible way that we can do. Yeah, whether it's venting or flaring, whether it's consuming electricity from thermal plants, all of that needs to be converted. At the end of the day, the world needs as much energy as it can get hold of. and that energy needs to be supplied. So we need to make sure that it is affordable, we need to make sure that it is sustainable and clean. And a mixture of renewable energy, you're blessed with hydro, we're not. And so we need to find alternatives to that. And of course, we're looking at different options. Renewable energy is something that we started working on very actively. We have installed over 600, 700 megawatt of renewable energy, wind and solar. We've just announced another project that will probably bring another 1,000 megawatt by 26, 2027. We're looking into waste to energy as we speak. We think there is a potential for that. We don't have a lot of waste to convert it to energy, but whatever we have will be converted. We're looking into geothermal, utilizing the assets that we have from the oil and gas operation, converting some of these wells into geothermal potential. We know the temperature is down there. We need to extract it and produce cleaner geothermal energy. And of course, the sun and the wind and the tide that we have. That work has already started. We have also embraced, as Dr. Fateh was mentioned earlier, 2050 as a net zero target for Oman. We spent 3 weeks just before coming here really detailing the action plans on how are we going to get to net zero by 2050. We identified the main sectors that are contributing up to 95% of the emission, and they're no surprise to anybody. It is the power generation, even though it's almost 95% gas-based, but it's still power sector is the main contributor, the industry is another contributor, transportation or mobility, the oil and gas, of course, and then finally the buildings, which will be addressed if we address all the other options. For each one of these sectors, we have identified action plans. We set targets for 2030, 2040, and 2050. We have different ways of getting to 2050. There is the accelerated path that will probably affect transportation. The technology is already in place. It's a matter of policies that we need to set so that we can introduce electric vehicles and hydrogen trucks and so on. The power sector is going to be another one. The challenge there, of course, is finding cheaper forms of storage, because unless we are able to store the electricity that we generate, we will not be able to supply electricity in a sustainable manner. Options do exist, but they are the traditional ones. We're looking for alternative options so that we can diversify. Industry is a third one. Some of them are easier to switch because they depend on hydrogen, reforming gas into hydrogen. We can supply hydrogen in a cost-effective manner to these industries. Others will probably be a little bit more difficult to abate, like steel industry and cement and so on. But we believe by 2030, 2035, we should be able to advance either the technology or reduce the cost of supplying hydrogen to be able to supply hydrogen to these industries and abate them. And of course, the last one would be building, which will be addressed by the other sectors. Oil and gas, we're working on them actively as well, so that we are switching the thermal plants, supplying the oil and gas industry to renewable energy. We also have a target for zero routine flaring by 2030, and currently we are on target. We should be able to achieve that. We're currently looking into all the potential sources of greenhouse emissions, from transporting the goods to the industry, to the fields, to the catering activities, to the activities that we do in the field. So we're trying to account for every kind of emission that impacts the environment, and then we'll address each one of them so that we can actually stand up and say, yes, we are producing hydrocarbon, but we are producing it in the most cleanest possible way to do, so that we can continue to do what we have promised the world to do, which is supply the world with the energy that it needs. We've declared, as I said, net zero by 2050, but we also declared the establishment of the Oman Sustainability Center to be able to hold me and my colleagues accountable to the targets that we set for ourselves. Establish relationships with international organizations and investors to be able to invest in the decarbonization journey that we are embarking on. We have also started, of course, the hydrogen economy journey. We announced to the investors the bid rounds for the hydrogen blocks that will be offered to the investors to start developing renewable energy and ultimately hydrogen. And of course, if it is for export, it will be ammonia or methanol, depending on what form of export does the other party is expecting. Locally, it will be used to decarbonize the power sector, and it will be used to decarbonize also the energy. I think we have a lot on our table to address. We cannot do it alone. As I mentioned to His Excellency, we need the collaboration of the international community, whether it's transferring of technology, transferring of know-how, or the investment in these, which we believe is lucrative and still MPV positive projects. So it's not so much the government have to invest in all of these projects, we can, but we think the international community and the private sector have a better role to play and probably are more suited to execute these projects than ourselves. Thank you very much, and I look forward to the questions.
Thank you. Thank you very much, Mr. Minister, for that. I'd like to hand the floor over now immediately to His Excellency Minister Al-Alfi, who's the Minister, Al-Mala, excuse me, who's the Minister of Petroleum and Mineral Resources in Egypt. Thank you very much.
Thank you. Well, I have to start by thanking Dr. Fateh for this kind invitation to be a participant in this important Outlook launch for the IEA 2022 and to be amongst my colleagues from Uganda and from Oman, their excellencies. Well, I don't want to repeat really what my colleagues have said, but I just want to praise the efforts of the IEA availing their important reports on an annual basis now for the last 24 years. Really, these important outlooks and reports that they are giving us is for us like an eye-opener for us to be able to see how the future would look like. We need to understand how the world is progressing with the most important topic, which is energy. Now, with the latest crisis that we have, I think that everybody now would sit and rethink again of the priorities of the energy developments and the energy priorities when we talk about fossil fuel, oil and gas, with what big pressure has been put on, together with the other options that we have when we talk about renewable, when we talk about new fuels like hydrogen in all colors, as well as when we reconsider nuclear. So in this case, with each of the major global crises, I think it is an opportunity for all of us. Definitely when we talk about fossil fuel, and I think that Africa, like in Uganda and Egypt, in the Middle East, like in Oman, and many other countries, I think that we are, and somehow our economies are more dependent on fossil fuel. This is true. However, this is not the answer. The answer is that we need to be looking at the future, and we need to really go to the transition. When we talk about the transition and how to speed up the transition, we talk about technology. We need to talk about availing and mobilizing funds. When we talk about mobilizing funds, we need to do this together in such important events. When we talk about being all together, different stakeholders, we sit on the table and we talk about our challenges and our problems and our priorities and how we could be helped in order to transition properly meaningfully, as well as without putting pressure on our economies and on our welfare and well-being of our people. But at the same time, and most importantly, we've been able to see that technology has progressed and has advanced a lot. Renewables has now been in a very well position. We can produce the kilowatt hour by less than 2 cents, US cents, while we are still having our fossil fuel kilowatt per hour is more than 7, 8, 10 US cents. Therefore, we can see that it is cost effective. But the problem is how we can spare this energy mix in this very short period of time. Can we live tomorrow 100% renewable? I don't think that we are ready. But therefore, we need diligently to work hard on decarbonizing our fossil fuel in the such time when we will be able to replace 100% the fossil fuel with the renewables and all kinds of energies as we spoke. When we talk about that, I just want to say that Africa, Middle East, and as well in our country like Egypt, for example, and many of other countries, we have really embarked the journey for transitioning. We have big projects that we have signed, and we have in place now, already in place, solar projects, wind projects. We've signed during the COP yesterday and the day before yesterday big projects for 10 gigas with Saudi Aqua Power and another 10 giga with Emirati Masdar. So we are talking about big projects in the coming few years that we've signed up. Same thing with hydrogen, and when I talk about green hydrogen, I can also consider low carbon hydrogen, but at the same time, what we need to accelerate is to develop the market and to develop the supply in order to cover the needs of the coming years. Having said green hydrogen, we've also embarked together with many, more than a dozen MOU to pilot some green hydrogen project in place. But at the same time, we all need that we all see that we all need now at least, and as has been clear in the outlook of the report of the IEA, natural gas will be needed for the coming several years until the year 2050. Sometimes in some of the scenarios it can go up to 23%, some scenarios down to 20, 18, whatever, but it is still part of our energy mix. What we are requesting is to do, and this is something that all important energy companies are currently developing their technologies for decarbonization of their fossil fuel, especially natural gas. And at the end of the day, what we need to have is full cooperation and full inclusion of all stakeholders together. We should not discuss a priority of a fuel rather than another. We need to accept the fact that we are not ready, but at the same time, we need to push more funds for decarbonization and more funds for renewables in the coming few years. Actually, and the last point that I need to say here, that since Egypt is hosting the COP27, so we are also representing Africa, and Africa is a continent that needs really to be looked at with more preferential packages, whether concessional funds or availing more relaxed transition period in order to provide proper time for the development of the people in our continent. Perhaps you know, but I need to reiterate that 600 million people in Africa has no access to electricity. So this is something that needs to be considered. With that, I really once again would like to thank Dr. Fateh for his great effort in being all the time with all the energy community in the world, availing all information for all of us, updating us with the latest data that would give us the light in order for us to see the pathways that we'd follow. Thank you very much for inviting me, and thank you for having me together with my dear minister colleagues from Oman and from Uganda. Thank you very much. Thank you.
Thank you very much, Mr. Minister. And with that, I'd like to hand the floor back over to Dr. Fatih Birol.
Thank you very much, dear colleagues. We are at the end of this great event. We were so happy that three very excellent ministers accepted our invitation. Mr. Minister, before you came, I already talked about these two countries, but Egypt being our host here, very many thanks to you for hosting all of us here in an excellent way, and congratulations for all the achievements in both in gas but also the rest of the energy sector. Dear colleagues, I think when I look at the three countries with very different, three different energy sectors and preoccupations, one common denominator is clear. The world is going in the direction of clean energy, but it should be an orderly transition and a just transition, as we had already in our World Energy Outlook. And I thank all the three our ministers, first of all, coming here, but more importantly, for the great work they are doing in Uganda, Oman, and Egypt, and beyond. These type of ministers are source of inspiration for me and for my colleagues at the IEA. Very many thanks to all of you, and thank you very much for coming to World Energy Outlook event. Thank you. Thank you very much, madam. Thank you very much. Mr. Minister, thank you very much.
Thank you,
very nice to see you, sir. Very nice to see you. Looking forward to see you again. Thank you very much.
Dear participants, is the mic on? Yes, wonderful. Dearest participants, 259 days of the war in Ukraine is taking a toll. I wonder if you hear anything. Do you? Wonderful. I don't really hear my own voice, but that's pretty good that you hear something. Indeed, the war is taking a toll. The unprovoked war is continuing, and unfortunately there is a risk of escalation. Thousands of civilian casualties, millions being fleeing their homes, hundreds of billions of damage to critical infrastructure and to the environment. Indeed, the pressure is mounting on people, society, businesses, and the nature. Now, right at this Nordic Pavilion and to our online speakers, we're turning the focus for a while on Ukraine, and specifically with our top-line speakers and panelists, we'll consider issues that could the recovery assistance to Ukraine actually address the immediate needs and at the same time enable building back better and a more resilient Ukraine. Secondly, do we have an interest? Do we have the capacity? And do we have actually the means to build back better? And what is the role of IFIs? What is the role of civil societies? And what's the role of local governments? And finally, the issue of today's session is that is there anything we could do more in order to be sure that the war in Ukraine and its repercussions do not derail ourselves from climate action? Dear participants here at the Nordic Pavilion, my name is Pasi Rinne, and I'd like to welcome you on behalf of NEFCO, the Nordic Green Bank, to this afternoon's session. Before we turn our attention to actually sort of the first speaker, I'd like to remind you also that the event is streamed, and the event can be also and is being followed at norden.org. Now it's time for us to take the first presentation, and we'll hear an interview of the Ukrainian Vice Minister, Mr. Igor Korhoyev from Kiev. Due to the security situation in Kiev, he could not join us on time online, and therefore the interview was pre-recorded. Ladies and gentlemen, Igor Korhoyev.
Vice Minister Igor Korhoyev, thank you so much for joining us at the Conference of the Parties in the Climate Conference in Egypt.
Thank you very much for inviting me. It is very pleasure to have this interview with you, and because NEFCO is our strategic partner. And for me, it is very important that we keep in touch concerning all of the important issues, especially rebuild of Ukraine, modernization of our country, and of course, its European integration.
Vice Minister Korhoyev, the government of Ukraine launched an early version of the National Recovery Plan already at the Lugano conference in June. Many of us have gathered here in Egypt today are familiar with this document and how the government actually and the number of organizations contributed to that and put that together. And many of us are already providing or in the process of providing assistance to Ukraine along the lines of the National Recovery Plan. Today, Vice Minister Korhoyev, how would you describe in a nutshell the current most essential priorities of your government in terms of recovery and reconstruction?
Thank you for this question. First of all, the key tasks for the government right now is to hold the general situation, especially economic and social one, and to fulfill all of the necessary obligations. We generally have a three stages approach to our well-being. So the first stage is how the country should exist during the martial law. And the basic tasks here is to actively and properly react to all of the emergency crises, and also for the government to hold the social and economic situation. The second phase is concerns about the rapid recovery when the war will stop. So the idea is to renew the basic facilities, the basic services for the population to get back to those territories that are deliberated. And the third phase is so-called Marshall Plan. It is much more about the modernization of the country, reforms implementation, and about the future. So for this moment of time, the key task also of the government is to rebuild that facilities that can be rebuilt for people to exist. So all of these stages, they are going a little bit in a parallel way. So we are not waiting, for example, when the war stops and then we will start rebuild something. No, we already rebuilding those facilities that can be rebuilt and those that are necessary to rebuild. The general approach was announced by the president, build back better. And this approach, it is in line with the key European and global initiatives as green and digital. So the recovery itself should be more effective, more efficient, and it should lead Ukraine to the modern state.
Thank you. And one of exactly the outcomes of the Lugano conference and the subsequent donor conferences have particularly called for the recovery process to pay respect to sustainability, which you already mentioned, and that the recovery should be aligned with the Sustainable Development Goals and the Paris Agreement. This is, of course, very much of interest of many of us gathered here today, and many of those organizations that are already providing support to Ukraine, not least the European Union. Vice Minister Korhoyev, how do you see today the value of sustainability and the exact need for green transition? And is the recovery planning moving ahead to build back better?
First, as I mentioned in your previous question, build back better, that's a general principle that includes the green transition as the key pillar. So the key issue and the key idea that everything that should be rebuilt, renewed, reconstructed, modernized, it should be more climate neutral, it should be more efficient, and also it should be more user-friendly. When I'm talking about more user-friendly, I mean the more accessible to the people. So the person, the Ukrainian, it is within the center of this idea, rebuild back better. And also the key task concerns not only the physical infrastructure, it also concerns the necessity to eliminate the impacts on the nature by the war. So in the long-term perspective, Ukraine should be green and zero, with the net zero economy. So all of the facilities, all of the buildings, all of the infrastructure, especially communal one, that is right now using a lot of the fossil fuel, it should be as effective and as efficient as it can be due to the request of the time. And the vision itself, it considers that in future, while modernizing Ukraine, we will receive more efficient economy, we will receive more climate neutral economy, and also we will receive a key complementary part of the whole European Union that will be in line with the general key tasks and general key principles of the development of the European continent.
Before February 22, many of the local governments in Ukraine were actively already working on territorial development, improving municipal infrastructure, and many cities and municipalities were also working towards the Paris Agreement goals. Now, many of these cities, of course, face that critical infrastructure is damaged, demolished, and must provide energy, water, food, health services, education to their citizens, but also to a large number of internally displaced people. Vice Minister Korhoev, communities, territorial development. How do you see the role of local governments and municipalities in this reconstruction process? And what kind of a support would be needed for them, for the local governments, for the communities to adapt to the situation, become more resilient, and getting back on their feet, and even build back better? We consider generally decentralization as the key reform and the most successful one that is confirmed by all of the reports made by the European Commission, European Parliament, Council of Europe, and the empowerment of the local communities shows its capability and its sustainability during the invasion, when all of the burdens was put on the shoulders of the local mayors and local communities, especially with the IDPs, especially with the providing of the services. So the key task to have local communities, to have local self-governance as the integral part of the reconstruction and modernization of the country. And here the government sets the following tasks. First, we need to conduct decentralization and to finalize with the fixing all of the necessary provisions in the constitution. We also need to set the necessary guarantees for the local self-governance to be self-sufficient, especially within the budget and taxes. Also, we need to develop the capacity of the local communities and local managers to properly manage the future renovation and modernization projects. And also, the system itself should be transparent and accountable to the citizens. So the restoration, construction of the temporary housing, the modernization of the communal infrastructure, that would be the key priorities for the local communities. And here we consider that the role of such financial institutions like NEFCO is the principal one, because NEFCO has very good relations with the local communities and very good history of building these relations and a bunch of implemented projects. And we consider that also NEFCO would be a very important partner within this development scope that I mentioned. Thank you. Many countries and institutions have already pledged their financial support towards the reconstruction. But the Ukrainian government, cities, and the civil society in Ukraine are working together actually to updating the national recovery plan. Transparency, appropriate accountability, and anti-corruption measures are of importance to both the national and to international partners in this case. What's the management structures and processes, as well as the coordination functions in place or to be put in place to ensure that these funds would be then properly used?
The proper usage of potential investments for the recovery are principal. And that are the messages that we hear not only during Lugano conference, but we always hear it from our international partners. In this case, it is very important the involvement of a broad network of the stakeholders. It is very important to guarantee that the procedures, the compliance procedures, would be set, developed, and approved by all of the stakeholders of this renovation. Also, it is very important to use the digital instruments, because as you know, Ukraine has already proved that the digital transformation is a feature of Ukraine. And also it is very important to guarantee
that the procurement will be effective, transparent, and accountable. We have already the digital platform Prozoro. So in this case, the procurement system also should be looked at different way and a different point to understand in which way it can be adjusted to respond to the main questions, accountability and transparency. And also it is very important to have the external monitoring bodies, different reform offices, different monitoring committees. And all of these things that I mentioned, they should be bilaterally approved by Ukraine and the number of donor board or donors from another side.
Digitalization indeed has been one of the kind of features of Ukraine. Ukraine also made a lot of progress in actually decarbonizing its economy between 1990 until 2020 and 22. Now, finally, Vice Minister Korhoyev, the global leaders are gathered here in Egypt at this climate conference and dedicated to combat climate change and working to limit the global warming to 1.5 degrees. At the same time, there are growing concerns that the possible escalating war in Ukraine, energy crisis, inflation, and the unsustainable economic development that may derail us actually from climate action. Vice Minister Korhoyev, what is actually your message to the global leaders here at the climate conference in Egypt in these terms?
My first message will be, if we would not cut the global emissions within the next 7 or 10 years, at least to half, the effects from this will be only accelerated. And the world will become increasingly riskier and dangerous. So my next message will be about Ukraine. We were capable to cut the emissions from 1990 to 2019, more than 60%. And that issue will be continued. My third message will be next. The renovation and modernization, not only the Ukraine, but European economy, should be closely in line with the green agenda. There is no another way that all of the global stakeholders take this not only like the goal, but already as the way of behavior and a part of our future planning and our future development. And also the commitment that we take based on the Paris Agreement, based on the COP declarations, they should be fulfilled. They should be embedded into the strategies and planning documents, and also they should be financed. Thank you.
Vice Minister Korhoyev, thank you so much for being with us today. We look forward to stay in touch with you, collaborate with you, and finally stay in peace and safe.
Thank you.
Goodbye.
Goodbye.
So, Ukraine fights for its freedom, continues fighting for its independence. We all, of course, are hoping for lasting peace in Ukraine. And at the same time, it's really important to pay attention to the last message of the Ukrainian Vice Minister, as he actually reminded all of ourselves that unless we are capable of reducing the global emissions by half in 7 years, the world will be a riskier and even more dangerous place to live. I think that's a worthy message to take away from his presentation. WWF and the Boston Consulting Group gave recently a very comprehensive report on sustainable economic recovery for people and nature for Ukraine recently. This report has been well received, and it is a bunch of good findings on the essence of why sustainable recovery indeed is needed. But moreover, it's also clear recommendations how such sustainable recovery should then be implemented. Ladies and gentlemen, Bohdan Viktor, the CEO of WWF of Ukraine, on the 24th of February 2022, he woke up to the sirens in Kiev. He spent the day and the following days, like many other people in Kiev, in the bomb shelter. And as he spent his days in the bomb shelter, also his meeting with the Minister of Agriculture was cancelled. And as the meeting with the Ministry of Agriculture was cancelled, so was also to cancel the agreement that Ukraine was going to sign on the climate adaptation program. The climate adaptation program of Ukraine is still waiting for better days to come. Now, let us turn to a presentation by Bogdan and his colleague Andreas Beckman from WWF. Thank you so much for joining us. Please, the floor online is yours.
Just please confirm that you hear me properly. Hi everybody, just confirm that you hear me properly.
Bogdan, we do hear you. Please speak up. COP in Egypt is a noisy place and you need to use your voice. Thank you.
Thank you so much. I kindly ask you to share the presentation we jointly prepared to show the main highlight and information for you. So regarding what's happening in Ukraine, we really understand the current situation in Ukraine and those awful war. It's total disaster, not only for people, but also for the nature, which is like silent victim of this awful war, which is happening now in Ukraine over 9 months. And this situation in Ukraine, this war require immediate answers from both sides. First of all, we clearly understand that urgent humanitarian needs should be met as first priority, but we should do something with enabling condition, because environment we live in, the water we drink, air we breathe, should be good quality for our survival. And considering that the further strategy on recovery of the country, both humanitarian and environment, should be done, and it should be done in proper way, not reconstructing the past, rebuilding old energy inefficient Soviet Union system, but building back better, much more far advanced, digitally technologized future should be built here in Ukraine. That's why we created those reports with Boston Consulting Group to show to those decision makers, to show to the international financial institutions, to government, to society, that sustainable post-war recovery is possible. And the most important, it economically beneficial in long-term perspective. Next slide, please. And if we consider the report, previous slide, please. Yeah, thank you. And if we consider the report, there is plenty of recommendation on different sectors of Ukrainian economics, which has tremendous impact on the environment, on the climate, but also on our well-being, like agriculture, housing, energy sector, transport, and biodiversity. And we provided joint recommendation, a crucial one, how we could deal with those war consequences in the future, and what kind of solution we could provide to those decision makers. And basically those reports contain sets of recommendations for different key sectors of Ukrainian economy, which is contain over 80% of Ukrainian GDP, and have direct impact on the environment, climate, and people well-being. And actually, this report is a product of good collaboration and shows how we could invest in our future, investing in sustainable recovery of Ukraine, building much more energy efficient housing, for example, or much more wisely use water in Ukraine. Next slide, please. Of course, we consider that there are several approaches should be taken, and there are short-term management measures, but also long-term needs should be met during post-war recovery of Ukraine, as reconstruction could take a long period of time. We clearly understand the damage to the people is tremendously huge. Millions of Ukrainians moved from their homes or fled abroad. Damage to the civil infrastructure and also to the environment estimated of about billions of dollars. And its war is still continuing. The damage at the end will be much more higher. But we clearly understand one important thing. If there are any reconstruction needed on any management strategy needed on post-war recovery, any significant harm to environment should be taken, and it should be principles in each reconstruction processes in Ukraine. And we believe this is really important for our sustainable post-war recovery of a country and creating future-proof country at the end. Next slide, please. Of course, our recommendation related to the key sectors considering our environment and well-being. And we clearly understand that in nature, everything is connected. You could not have clean and healthy water if you don't preserve forest or you have a proper agriculture system in the country. And it is also important to have a healthy ecosystem, which is only possible if there are biodiversity secured. For example, in our recommendation, we believe that at least 30% of Ukrainian land should be under proper management and protected. And it is reflected in the EU biodiversity strategy, for example, because nature is essential tool for our well-being. And it provides plenty of ecosystem services we depend on, like food, clear water, and many others. Next slide, please. Of course, we clearly believe that implementing such approach on green recovery of Ukraine only possible under proper governments, which should be integrated in the process of EU integration, and Ukraine selected these pathways to be part of EU family, which is higher environmental standards than currently exist in Ukraine, and is quite vital pathway. And of course, we should invest in human capital to build those capacity which enable to implement all those sustainable projects and sustainable recovery plan here in Ukraine. And we believe, as Ursula von der Leyen, President of the EU Commission, mentioned at Lugano, Ukraine could lead in green sustainable post-war recovery and could be the case for not only for EU, but the whole world at the end. And we could follow our strategy and those inspiring vision. Next slide, please. Of course, we understand that there is clear economical issue, and in this report, we would like to highlight it that sustainable post-war recovery really matter, and those decisions considering environment at the first stage are definitely economically proven. For example, if we calculate ecosystem services provided by nature, it's like whole Ukrainian GDP. And we should really appreciate what we are receiving from nature. And now, even in Ukraine, we are feeling how important clean water or its existence now for our surviving. And we should invest in those sustainable approach that will ensure having those ecosystem services provided in good manner and good quality. And if we consider, for example, housing sector, we clearly believe that in this case, rebuilding new houses from those destructed ones using recycled cement and building carbon neutral and energy efficient building quite beneficial. It costs like 20% more than average building, but in 10 years, you will have full revenue. And at the end, you have a building which consume at least 20-30% less energy sources compared to those was built for the Soviet Union time. And it's quite economical benefit for the whole country if we think in long-term perspective. And this approach also related to another sectors. Of course, a lot of work should be done, but it's clear and obvious that pathway on climate and nature positive future will be benefit not only for people, but also for economy. And there is plenty of solid arguments provided in our report, which confirms this theory related to each sectors like agriculture, food and agro, etc. Next slide, please. Yeah, and as I mentioned earlier, we have plenty examples regarding those decisions which could be taken if we consider those sustainable possible recovery of Ukraine. And I would say the key message should be taken in general. We investing in future of Ukraine, and just simply from economical perspective, investing in sustainability, in sustainable future simply means infinite gains for the country, which means country survival, which means country stability, which means that natural sources will be safeguarded, which means we have sustainable source of energy, not only for us, for housing, but we have sustainable resources for industry. We have energy enough to supply Ukrainian production, and we could have wealthy and healthy economy because we created enabling condition for everything. And the key in nature and key in sustainability, because we would like to play those infinite game and have strong and resilient country. Thank you so much for attention.
Thank you, Bogdan, very much for your presentation. The report indeed is absolutely comprehensive and well received for a reason. The 185 billion, the value of Ukrainian ecosystem, is not only important for Ukraine, but for us globally, as Ukraine is one of the largest exporters of wheat and other grains and oilseeds. I'd like to give an opportunity to anybody in the public if you had a question or two to Bogdan at this stage. If no, Bogdan, is there any questions to Bogdan and his team? If not, we're moving on to the next stage in our program, and I'd like to invite the panelists. And the panel discussion is an extremely sort of interesting group of people who have all a significant insight to the very issue, are engaged, and the organizations have a lot at stake on this very matter. While Yevgeny and Trond are getting their acts together there on Teams, on Zoom, I'd like to welcome Francis Malish to join me here on the podium. Dear participants, Francis Malish is the Managing Director of EBRD Financial Institutions. In his previous position, he was responsible for EBRD's operations in Central and Eastern Europe and actually oversee the establishment of EBRD's operations in Ukraine. So it's really a pleasure to have you with us. Thank you for joining.
Thank you for having me.
Good. And I'd like to sort of start our panel discussing by asking Francis, that now that the war in Ukraine, in many of our minds, is actually risking ourselves to derail our focus on climate action. You work with financial institutions, the clients of yours. How are they affected with the price of money, and is that having a repercussion on the climate action?
Well, they are clearly affected. It's not just the price, it's also the availability, actually. We now start seeing, since the war has started, some clients have gone to market with the same sort of transactions 1 year. Okay. And we see that the margins that they have to pay to get their transactions funded are 3 times higher. The tenor that they can get from the market are reduced, sometimes by half, sometimes by more, but demand is not there. So demand has evaporated. Demand has gone from, say, for a 200 million transaction, you used to get 600 million of demand a year ago. For the same, you now barely have the 200 million that you can find on the market. So all of the clients are affected. All of the countries, from say the Baltics to Bulgaria, which you maybe could call the new frontline states beyond Ukraine, from a financial standpoint, they're all affected. Of course, Ukraine is very, very affected. The financing needs of Ukraine are absolutely huge. The situation of Ukraine is extremely dramatic, but the financial markets have taken flight out of the whole region. And yes, this could derail investments for the energy transition, just like the fact that honestly we are also delaying our own energy transition by reopening coal plants, for example. That also delays the transition.
Francis, EBRD is one of the largest, one of the most significant organizations actually active in Ukraine and providing assistance. How do you see the National Recovery Plan in general, and how do you see the role of EBRD, particularly now in its approach to Ukraine and the recovery?
Well, I think the national recovery has to be really thought strategically and prioritized properly. And EBRD is a very large investor in Ukraine, but the work for the reconstruction will need to be joint work between IFIs with the private sector, as well as, of course, including EBRD. Our president was in Ukraine a couple of weeks ago. I think she went to Kiev. She's the first IFI president to be going to Ukraine since the large-scale war started in February. We continue to work in Ukraine right now. We have deployed more than €1 billion of funding into Ukraine since the war started, primarily through working with state-owned firms like Naftogaz, like Ukrenergo, literally to keep the lights on in the country, through trade finance as well, to support the continuation of trade in the country. That calls very careful calibration of this microphone here. So to support the continuation of trade in the country, and also to support the agriculture sector, because agriculture needs to finance its inputs. It's urgent. We work with local private banks to guarantee their new exposures to the agriculture sector so that farmers ultimately can continue working their fields in the country. Now, about reconstruction, I see it in a couple of phases. One is, let's not forget the current emergency. Okay? Today, it is crucial to keep the lights on in Ukraine. If we don't keep the lights on, people will die. Okay? Because it's not just light, it's also heating. Okay? And there's a race between destruction and repair that is going on in Ukraine. At some point, this race will need to be financed by grants from the partners of Ukraine rather than by loans that IFIs can give to Ukrainian companies, because there's a limit to how much they can borrow. Okay, so that's the first stage. It is crucial. Then there's a second stage, is when we have a ceasefire. Then will be time to invest, and then we need to have proper priorities, as the minister said, and as Igor from the WWF said. It's really important to know where we're going to put that money, but it will also be important to draw in the private sector investment, because the amounts that the private sector has available for reconstruction are going to be much larger, if done right, than what the IFIs can do. However, let's not forget that there could be an extended period of time when the threat of war is still with us. Remember that peace was signed between Russia and Germany in 1990, 45 years after the end of the war. So if we have a protracted period where we don't have active war, but we don't have peace, we will need to find a solution to convince the private sector that it is safe to come to Ukraine. And that can only mean some sort of de-risking of private sector investments, specifically for the case when war resumes, for that eventuality. And then you have a third kind of longer term development stage, which is when you have a peace treaty, when you have a more solid, let's say, relationship between Ukraine and Russia, a respectful relationship between Ukraine and Russia, then you can get rid of all of these precautions, and you can attract investment in a very good way. And when you talk about building back better and greener, I'd like to say, as compared to when I was in Ukraine between 2014 and 2018, what we've added is back. Because what we were doing in those years is actually building better and greener already. And this war gives us an opportunity, creates, of course, tragedy and destruction, but this gives us an opportunity to build Ukraine in a way which would have been perhaps hard to build, or maybe harder to build without it, because the structure of the Ukrainian economy in the long term would have created a less competitive economy, because it was the infrastructure was very much focused on fossil fuels, because of these sorts of things. And now we have a chance to put Ukraine on a growth path which will be even better, because we start anew. We will start with new we'll start with new capacities, new technologies. So it's a chance for Ukraine to jump ahead of the pack.
Thank you so much, Mr. Malija. You addressed a number of important issues, how to pave the way for private sector investments back to Ukraine, and how to at the same time address the immediate needs while looking at strategic longer-term resilience type of issues. I understand that the EBRD conducts also Green City program in Ukraine. Would like to explain a little bit of the rationale of that activity, please?
Yes. So a few words about the EBRD Green Cities program. We started it in 2016. It now extends to about 50 cities in the world, and it has covered 75 different investment projects. We have 7 Ukrainian cities in the Green Cities program: Dnipro, Mariupol, Kharkiv, Kryvyi Rih, Khmelnytsky, Lviv, and Kyiv. Okay? And what the program is about is helping the city actually prioritize and plan itself into a low emission, sustainable city. So you start from a situation of a city which was not low emission, which was not as sustainable. Say Kiev had a lot of coal-fired or gas-fired heating. How do you bring it into a city from a transport standpoint, from a heating standpoint, from simply the layout of the city, the planning of the city, that is nicer to live? And one of the colleagues said we have to have a user-friendly recovery. We want to have user-friendly cities with the Green Cities program. Cities where it is good to live. So that's what the program is about, and it works with the city, all of the stakeholders in the city, to build better cities to live. And the program is still ongoing right now. For example, of course, it's been suspended in places like Mariupol, but in Khmelnytsky, for example, we are working on a plan to continue improving the city and also integrating the need to welcome internally displaced people in the city, and how you, in the short term, make it a more sustainable, easier to live experience for people that have been displaced by the war.
Thank you so much, Mr. Malish. Now I would like to invite our guest, Yevgeny Zazyatko from the Eco Action to join us. Yevgeny is the head of climate department at the Environmental Initiative Center. And I hope that we can have Yevgeny here on screen with us in a second.
Hello, should I start to talk? Or?
Good, Yevgeny, there you are. And we actually
Hello.
hear you loud and clear. Thank you so much for joining. I think it would be interesting to sort of hear from you, because you and tens, if not hundreds of your colleagues and your networks have actually continued to monitor the environmental impacts of the... You and your colleagues have made professional contributions to the national recovery plan in Ukraine. So, Yevgeny, thank you so much for joining us, and it would be good to hear of your reading of the situation and the need for environmentally sustainable recovery in Ukraine. Please.
Yeah, thank you. It's a very important topic now in Ukraine, even though the war is still going. But it's good to raise actually this topic now. Eco-Action worked always, like from the beginning, from the time when we established, we worked to raise climate ambition in Ukraine. And actually during the last years, Ukraine improved a lot. We changed a lot of legislation. And for example, we set a goal for carbon neutrality in 2060. We update NDC for the real reduction, which was not the case before. And the civil society actually played also the role in that review and process. We adopted the strategy for the adaptation to climate change and many other things, plus renewables. The numbers of renewable energy grow in Ukraine during the last 5 years. I would say it was rapidly. So there was a lot of improvement, but of course in February a lot of change. But even though Eco-Action didn't change our long-term vision that Ukraine actually should reach the goal of climate neutrality in 2050, so that's why we are still advocating for this goal during the reconstruction period too, and trying to improve and raise the ambition of Ukraine, because we see that it's possible. Of course, it's when the war started, it changed a lot, that we are mostly focusing on surviving, and sometimes it's even hard to back and talk about reconstruction when the bombing is flying over houses. We have blackouts, the territory is mined, and we have all over the news that people or blow up on some mines or died in some houses. But this is the time when we should talk about the reconstruction, because when the war is stopped, it's the time when we should implement actually this reconstruction plans, and we can't lose this time now. So we need to prepare and start to work, plan this reconstruction period now and adopt it as soon as possible. So that's why civil society is involved as much as we can in this process. Of course, it a lot depends how the government is open, but we do as much as we can to participate and to show the view of civil society in Ukraine. How do we see the reconstruction period? And Yeah, what's important, and that you also mentioned, that Action is keep monitoring the cases of potential negative impact to the environment. And so far now, from the open sources, we collect more than 700 cases. You can find the map of these cases on our website, and all of them would be like negatively affected the soil pollution, groundwater, and like the whole water resources pollution, air pollution. And even though if the war would stop now, it doesn't mean that this effect would like just gone for nothing, and it would be still there, unfortunately, and we can't stop. I see my presentation, you can click to another slides. Unfortunately, we can't, even if the war would stop now, so the effect from the environment we would see even later, like, and from some experience, even after the World War, for example, in France, there is still closed territory because they still polluted because of the bombing. So we need to know that the impact from the environment would be huge on us, on our health, and we need to be ensured that actually this impact is reduced as much as it possible, and it's not affected. Like we had a lot of, enough losses because of this war, so we don't want to have more losses because of the environmental consequences in the future. So that's why Action, as more than 50 civil society organizations in Ukraine, developed green principles. So it's 7 main principles how we see that actually would be possible to adopt transparent and sustainable reconstruction period in Ukraine. And of course, we see that it should be only the green, because with all that affect to the environment, we don't have any other solutions as how to like develop and reconstruct in a green way. So the 7 principles that we developed, it's integration of environmental and climate policy into all sectors. Reconstruction should be served the need of Ukrainians and promote the sustainable development of Ukraine. Develop of the green economy, environmental standards at all levels, adheres the European environmental planning tools for Ukrainians' restoration, the role of local self-government, transparency, and involvement of public and communities in decision-making. It's what was said by first speaker, the deputy minister. And the 7 is effective and functioning and use target donor fund for the post-war recovery and green economic development, just of course related to NEFCO and EBRD. So we try to cover like the whole possible process, and we want to be ensured that it's of course sustainable, it's transparent, civil society is engaged in this process, because more than 6 million people left like now live abroad because of the safety reason. But to ensure that all these people is coming back, it's important now to include them in the process of reconstruction, so they see that there is a future in this country and they have a place for it to come back, and they have a role in this place. So to have this transparent process would be also keep positive positive play in all this period for us, like for Ukraine. Thank you.
Thank you so much, Evgeny. It's really good to see the 7 principles that you have laid out, and which represent the position of the 50 NGOs. And I understand that you have been engaged with the National Recovery Plan, and that you have actually been providing support to some of the local governments in Ukraine currently. Would you nevertheless would like to a little bit expand and that how the civil society can be engaged and have an effect on how the recovery is planned and how it's implemented? Is the civil society having the role it wants to have?
Currently, the process is, I would say, closed. For example, Ukraine is developing a reconstruction fund. How the government in Ukraine see to receive a finance for the reconstruction period. So nobody see actually the draft of this plan. We was not able to comment or to be engaged in this development process. Hopefully and luckily it would be published soon, so we would have a chance to actually comment and propose some suggestions, and it would be accepted. Now action, because of the lack of instruments to be engaged, we also gave a few small grants. It's four grants to local NGO all around Ukraine. It's mostly in affected zone. It's Zaporizhia, Kharkiv region, Sumy, and a few small cities. Yeah, we're still deciding which one because the project is only starting. So we are going to work on green reconstruction because at the municipal level, all cities should develop plans now how they're going to reconstruct. And it's important that actually municipal level, like the cities, is going to implement the whole national plans, which are going to be adopted at the cabinet of the ministry level. So that's why it's important that the municipal level is now also engaged in development process and after in implementing it. So that's why we also see a role now of local civil society organization in the process of developing these plans to play a role actually to raise ambition. And hopefully soon the process would be more open. And for example, you also mentioned that Action also comment on the draft recovery plan for Ukraine that was published in Lugano. For now, we didn't see the final version. We only saw the last one that was in July. We gave comments, and after the process is a bit stopped. So we are looking forward to actually see what suggestions was accepted from the ministries, from the cabinet of the ministry, was be heard, and hopefully the process was more improved and started to be more sustainable as we expected before.
Thank you again, Yevgeny, for your absolutely valuable insight here. And I think it's really important here to take away the crucial role that the municipalities and cities play in Ukraine at the moment. As we have heard that the government of Ukraine actually now turned to the municipalities and requested the local governments to come up with local recovery strategies. At the same time, lots of international organizations are also turning to local governments and requesting them to actually propose financeable, bankable projects. And at the same time, it is the municipalities in Ukraine that are housing, accommodating the millions of IDPs, are trying to repair the energy installations, provide the health and schooling services they ought to give not only to their citizens, but also those temporarily housed within their municipalities. And I think that note probably brings us to the next panelist, and I'd like to introduce Trond Moe, the Managing Director of NEFCO. NEFCO is the Green Bank, the Nordic Green Bank, and let us see if Trond, we can actually hear and see you here online. Trond, can you hear me?
Yes, I can hear you very well, Fasi. Nice to see you there in Sharm el-Sheikh.
Thank you so much for joining, Trond. And same to you as to other speakers, so please speak up. COP is a noisy environment, and we are really fighting for our existence here in terms of different voices and activities here around us. But thank you so much for joining. NEFCO has recently actually launched a green recovery program for Ukraine and has had a long-term presence in Ukraine working with municipalities. Trond, would you like to shortly explain the view and the approach NEFCO is taking on Ukraine?
I would be happy to do so. If you can use a couple of slides, and then I'll give our perspectives on our program for Ukraine and a little bit of background from what we have been doing in Ukraine. We have been there alongside with EBRD and others for many, many years. So if you can move to the NEFCO presentation. You see we can do that. Yes, and the next slide. Yes, thank you. So in NEFCO, our only task is actually to finance green transition projects. And we do it from a bottom-up approach to accelerate projects faster than they would otherwise develop. In NEFCO, we finance small and medium-sized projects, but we do many, and we try to deliver fast. In total, we have, over the years, financed over 1,500 projects in areas such as energy efficiency, renewable energy, clean water and sanitation, waste management, cleaner industrial processes, and others. If you go to the next slide, I'll give a little background what we have done in Ukraine and what we are doing currently in Ukraine. We have worked for many years in Ukraine and done lots of projects, and we have, in fact, a quite large outstanding portfolio even right now. We focus also here on small and medium-sized projects that can give fast, tangible results. We have very broad experience in how to implement energy-saving and environmentally friendly projects in a sustainable and cost-efficient way. We do have a large network in Ukraine, as was mentioned initially by the minister as well, and we have staff both inside and outside Ukraine that knows the country extremely well. Go to the next slide. And now to our program that we have just launched now. Francis mentioned that IFIs need now to continue their portfolios, but switch from lending to grants, and that is exactly what we are doing. We have, in fact, many years of experience of managing grant-based trust funds and concessional loan facilities in Ukraine, along with our own commercial lending, of course. We have engaged more than 100 municipalities with green infrastructure projects in energy efficiency in public buildings, street lighting, district heating, water and wastewater projects. And these are all basic infrastructure needs that is now needed more than ever in Ukraine, and it is needed fast. In fact, everything that has been destroyed must be rebuilt. And our response to destruction shall be to rebuild even better, even greener, and fast. Next slide, please. So just to conclude these few slides, then the objective of the program is to partner with Ukrainian municipalities all over the country to address both direct and indirect consequences of the war. So that includes short-term repair and restore needs, rebuilding of utilities and facilities serving internally displaced people, and repair and upgrade of critical public service buildings. And we need to do this in a way that integrates environmental considerations into all recovery action. We launched this program in June. The initial funding has already come in place very fast indeed, but we can, of course, and shall do even more and better green projects in Ukraine. Thank you.
Thank you, Trond. Thank you so much. I'd like to ask you, Trond, a question related to the very sort of a role of NEFCO and also the EBRD. And we have previously here heard how the local governments in Ukraine have a very pivotal role at the moment. Trond, how do you see that NEFCO, maybe together with the EBRD and others, could actually provide even more technical assistance or capacity building to the municipalities so that they could overcome this immediate need that they have, that they need to have pair of hands, they need to be capable of planning and strategizing the local development, indeed so that it takes into account the do no harm and the environmental needs of the future. Is there something that we could do more, Trond, on that one?
Yes, luckily IFIs have always had sort of a dual role. We provide financing, especially when others do not and we come in early, but we also always have had a capacity building purpose. And we have built directly with municipalities building capacity for a long time. But right now we need to increase this element. So it's important that the grants that are being provided also come with quite solid capacity building projects. We need capacities not only to handle the financing and build the projects and engineers, but as we heard today from WWF and EcoAction, we definitely also need to build capacity to do this better part, to do the green part. And we are ready to do our role, or play our role in that area.
Thank you, Trond. And I'd like to continue on the very same note with Francis and EBRD. And do you see, Francis, that the IFIs could do more in extending an arm to municipalities as they are currently a bit kind of pushed between the different interests? And is there more that EBRD and IFIs should do in terms of providing assistance to Ukrainian municipalities?
There's always more you can do, and we certainly should. I mean, one thing we should certainly do more is continue to cooperate with the other IFIs, because there's an immense task ahead, and we need to. The more coordinated we are, the more we can target to achieve a maximum impact. And so it will take a lot of dialogue among the IFIs and with the municipalities as well. Now, the other thing to keep in mind is the capacity. The resilience of the Ukrainian people is absolutely outstanding and admirable, but the capacity to manage the current time emergencies, the reconstruction, the strategizing, all at the same time, is not infinite. So we should work more with municipalities. We should also take care to not overwhelm them. Because remember, working with IFIs is complicated. Okay? I remember a client in Ukraine telling me it's painful to work with EBRD. It's painful, but there's a difference, which is 3 years after construction, the road is still there, because the money that was supposed to go into the road has actually gone into the road and not into the pockets of people buying the road. So the road that has been done is solid, okay? But it comes at a cost in terms of cooperation, in terms of capacity and so on. The other thing to keep also in mind is that this war for now is touching municipalities' ability to finance. Some cities can finance themselves in Ukraine, some others cannot, and some can, but depending on the size of the project. Say, when we were working in Kharkiv before the war, the metro in Kharkiv was of such a large scale that they didn't have the capacity to finance it as the municipality alone, so we had to take a government guarantee for it. So all of this creates an extraordinarily complex mix of shifting reality, of financing capacity, of needs as well, and a different mix as well of ability of IFIs to support, different mix of grants versus financing, and to make this work best, I think we will need, even more than before, to keep tightly coordinated, occasionally disagree with one another, but always speak to each other very, very frequently to achieve maximum impact in the country.
And Yevgeny, do you still hear me? And if you do, I'd like to ask whether you could kindly comment this very last question and the role of municipalities and what IFIs could do more in terms of that. And Yevgeny, if you're still with us.
Yes, of course.
Thank you. So if you could kindly comment on the potential sort of a role of the IFIs and how could they even more work along with the municipalities in Ukraine and provide also the capacity that the municipalities need. Is there anything that you would like to comment on that? Over to you.
Thank you. I think it was very important to mention about the transparency, and so this process should be transparent, and the reporting and how the finances used and it should be publicly available. So I think it also can provide less risk to any corrupted possibilities in some projects. And of course, the role of communities is a key in all this reconstruction period in Ukraine. So even though it's of course important, and maybe actually the FAS can actually play a role as a facilitator between national and local level. It's what actually civil society is trying to do, because during the NDC reviewing process, updating process, we tried to connect local and national level, because at the national level they adopt, they develop, they planning, but at the local level nobody actually know what is NDC and how it's applicable for them. And for example, at the national level they even didn't include that local plans that already was existed. So it was like two separate processes. And now there is also a risk that the municipalities local level is going to develop these local plans for the reconstruction, and we also have a national plan for the reconstruction, but what the connection between them? Are they related to each other? So maybe one of the idea also can be like a role that could be played as a facilitator between them, and in all these projects, like try to include, I would say, three main stakeholders. It's national government, it's local municipalities, and civil society, because usually civil societies bring like more ambition. They had a connection to like new technologies, to the expertise, to international experience also. So we actually, and we also can explain, because it's usually like at the local level there is not enough resources, understanding capacities to actually follow the whole processes. So actually civil society can also play a role, and it's important to be a part of this process too. Thank you.
Thank you, Yevgeny. Unfortunately, the last part of your reply was somewhat unheardable due to technical difficulties here at the pavilion. But nevertheless, I think our time for the session is coming to an end. And I think that the purpose of this session was kind of clear. And the aim that we set ourselves, that we wish to, with this session, to kind of showcase that there is a true interest from a number of donors and international organizations to both provide the immediate assistance and a longer-term reconstruction help to Ukraine. And secondly, that we have an extremely sort of a different situation from many of the other conflict or post-conflict situations, in that actually we do have a lot of knowledge. We have knowledge holders. We have already comprehensive scientific reports produced on the issue of the environmental impacts of this ongoing war. And we do already have a blueprint showing that how the recovery should be conducted, so that actually not only meets the current sort of environmental issues, but so that it's also Paris aligned. And finally, perhaps the more important aim of this session, very much highlighted by our elegant speakers, was that the conflict in Ukraine shall not derail ourselves from the climate action, but on the contrary, it should be one of the reasons that we take this conference very seriously. We nail down the sort of goals and we go and implement. Otherwise, the peace, the lasting peace in Ukraine would not be worth it. Thank you so much for your participation. Thank you so much for your Nordic Pavilion staff and persons contributing to this and making this possible. I really would like to thank Francis for joining me here on the podium. Big hands to Francis. And to Trond, to Bohdan, and to Yevgeny for joining us online. Despite a little bit of the technical difficulties with the Wi-Fi and with the audio equipment, I think we did our best. And I hope that you enjoyed. Thank you so much. Goodbye.
Good afternoon, everyone, and welcome to the Nordic Pavilion. The first question is actually, can you hear me?
Hello. No. Does your work?
Hello.
Didn't start it.
Hello, hello. All right, good afternoon, everyone, and welcome to the Nordic Pavilion. So this mic Let's see if it's third time the charm. Can you hear me now? Can you hear me? Can you hear me now?
Well, it seems to be working.
Great, thank you. All right, good afternoon and welcome to the Nordic Pavilion. There's quite a lot of noise here, and I also that you can also hear us. That's of course very important for us. So it is the finance day today at the Nordic Pavilion, and our heading is in anticipation of a greener spring. We all know that the war in Ukraine has revealed the weaknesses of our energy systems. Actually, we just had the first snow in the Nordics last weekend, and this is reminding us of the fact that the winter is coming. What we will discuss today is that how much can we accelerate the green transition? What is realistic in the short term and in the long term? How do we survive the winter which is coming? These are the questions that we will tackle today. We have a good lineup for this discussion. The first one who will join us will be the finance minister from Iceland. He is online. He is Mr. Bjarni Benediktsson. We hope that the link will work and we will get contact with him. Then we will have Christoph McLeod from the International Energy Agency. He is the head of energy supply unit of the IEA. Then we have Luca De Lorenzo, who is head of sustainability and mandate from the Nordic Investment Bank. And next to me is Nadia Gullestrup Christensen, who is chair of the Danish Youth Climate Council. So welcome all panelists. Now we are waiting for the link from Iceland. Here it is. Thank you very much for showing up. And I would say that what is actually a finance day without a finance minister? So we are really, really happy that you are joining us from Reykjavik. My first question to you is actually that there is a lot of talk about green transition, and there's a lot of talk about energy security and the coming winter. But I've understood that Iceland is in a very different situation at the moment. You are not so worried about the coming winter from the energy security point of view. Could you explain why that is so?
Yes, that's true. The current situation in the global economy has very clearly demonstrated the benefits of having ample renewable energy. And we are in Iceland, we are very fortunate that green and renewable resources do provide us with nearly all the electricity and heating consumed on the island. The energy transition in transport, however, in sea and in air are in initial stages, but well underway with regards to transport on land. What we've done in recent years is we've had extensive tax incentives that have pushed the transformation and resulted in majority of new cars imported to the island are either fully electric or plug-in hybrid. And now the next steps will include the decarbonization of heavy vehicles, trucks, bigger trucks, buses, and then later on ships. And finally, we believe a big change will happen in air travel with the help of also carbon capture, carbon storage technologies that some of them have actually been developed in Iceland, and obviously these sectors will be harder to transform. The only way that we can fulfill our goals in this respect is to get the private sector invested, and for that we've introduced green tax incentives. But going back to your original point, we have the hot water in Iceland. Houses are heated with hot water, and we have hydraulic power, which provides us with 99% of our energy needs when it comes to the production of energy. Some of the energy is also provided with turbines from the geothermal areas.
All right, thank you. So, Christoph McLeod, are there any lessons we could learn from Iceland about their energy transition and their resources, how they are using the geothermal energy?
Is this working?
Maybe this one is working.
Maybe I take your microphone? Is this one working? Either? Here we are. This one is now working. Thank you. Thank you for the question. And I mean, it is really great to hear from the finance minister from Iceland, because there are a number of important lessons that we can learn from the process that Iceland has gone through. And there's a few I would like to highlight in particular. First of all is the emphasis on efficiency, on making buildings as efficient and so that they consume as little energy as possible. The other aspect is developing domestic resources, energy resources, particularly those low emissions energy sources. Iceland is very fortunate in that it has large geothermal resources, but so many other countries around the world have their own domestic low emissions energy resources that they can develop, and they can learn from the Iceland example as to how they can do that. When we think about the energy crisis today, the reason it's having such a large impact on European countries and on the whole world is because of the role that fossil fuels had been playing in their energy systems. When we speak with policymakers, every single one of them says the same thing. We wish we had invested more into efficiency and into clean energy technologies. The crisis was caused by Russia's invasion of Ukraine and the gas supply crunch. And if more countries had gone through that process in terms of boosting their efficiency, boosting domestic resources, it really would have put them in a better position so that they would also be helping with energy security. And the other aspect to this is it's not just about investing more in clean energy for climate reasons. As I mentioned, it's very, very important now for energy security reasons. It's also very important for domestic jobs, for new industries to be developed. And that's, again, another thing that we can learn from what Iceland has been through. By developing domestic energy resources, you generate new jobs, you generate new industries. Those are very useful domestically, but also then you can start to be part of the future energy economy, which is starting to form. So the more countries that get on board, the more investment there is, the more that we will be able to boost those moves towards the new energy economy.
But you have the figures. You are actually following how the governments are investing in green energy at the moment. What do you see in the figures? Is there now the acceleration going on? Or is there actually a danger that there could be a backlash?
We are seeing a mixed picture. But one of the very positive things that we have seen is that since Russia's invasion of Ukraine, since the energy crisis, there have been a number of very positive policies that have been announced by governments. The US Inflation Reduction Act, the EU REPowerEU strategy and Fit for 55, Japan's green transformation, and great momentum behind wind and solar in China and in India. And when we put all of those new policies together, we see this really turbocharging investment into clean energies. In the 5 years since the Paris Agreement was signed, we had about just over $1 trillion of investment each year globally into clean energy technologies, renewables, efficiency, electric vehicles and grids and many others.
There was a slight uptick in 2021, but because of these new policies, we now expect clean energy investment to go from $1.3 trillion to $2 trillion by the end of this decade. That's a huge increase, mainly because of these new policies that have been announced by government. So that's very, very positive progress.
But can you trust, because much of this is also commitments and it's in the policies, but will that really materialize?
Many of those policies I mentioned, they are in legislation. The US Inflation Reduction Act has been through all of the processes, so we should have confidence that sort of catalyzing impact in terms of clean energy will come about. When we think about the Inflation Reduction Act, really one of the ways that it can be characterized is the most important thing that has happened for clean energy since the signing of the Paris Agreement. It really is that big. I don't think people fully appreciate just how important a role that will have in terms of boosting development of clean energies, both in the US and then for the whole world. But as well as those policies that are in place, we also need to think about the gap that there is between those policies and what we need for countries to achieve their climate goals, because there's a big implementation gap between those two aspects. Unfortunately, the policies that we have in place today are not yet ambitious enough for us to achieve our shared climate goals. We need to see a much, much bigger acceleration. And again, just to put one number on that, I mentioned that with the current policies, we'd go from 1.3 to $2 trillion. If we want to achieve 1.5 degrees, if we want to limit the temperature rise to 1.5, we need it to be $4 trillion of investment in the clean energy technologies by 2030. So another doubling from where we are going. So very positive what we've seen so far, but there's much more work that needs to be done. And in particular, much more needs to be done to catalyze investment in emerging market and developing economies. A lot of that increase that we are seeing is coming from advanced economies, and we need to make sure that no one is left behind and that we get investment happening globally.
Okay, so now we turn to Luca De Lorenzo. From the financier's point of view, do you see some sectors where you see that the green transition is taking leaps in the Nordic and the Baltic region?
Hello? Yes. Yes, thanks, Jukka. And of course, to continue a little bit on the transition, it's fundamental that we do this. It's fundamental that we reduce our addiction, I would call it, on fossil fuel. We are late. We need to speed that up. And now we have almost a little bit of a perfect storm. We have been doing this on a moral and climate basis, and now we are doing it more and more on a resilience, on a energy security basis, and if you want, also from a price signaling effect basis. The other element that was very relevant from Iceland and that you picked up as well is that the solutions will be national, and everybody will have their own domestic resources. Iceland is lucky with a hotspot where they sit on. In the Nordics, we are lucky with hydro and wind very much, and maybe going offshore now. So those are all elements that have worked well for now for us. But we need to continue and to expand the transition beyond actually only energy. And I think that's where now we are at in our member region, so in the Nordic Baltics. So it's also about transport sector and reduce dependency there, so electrification and so on. It's hard to abate sector, so it's also industries and raw materials. We need to get to those as well. They still use a lot of fossil fuel. We need to reduce our addiction there as well. So it's all over the economy, and I see more and more activities in our clients starting to tackle this. What is also very interesting is that as you go beyond energy as a sector, the other sectors, adjacent sectors, you have to really have a value chain approach. So let's take shipping, for example, which we are trying to, in the Nordics, to make more sustainable. So you're going to have to collaborate between the operators of the ships, the ones building the technology for the engine of the ships, the ones producing the new fuel, be it green ammonia, methanol, or hydrogen, or electrification, to provide to the sector. And it's this value chain approach that I think is really the next step in this coming decade.
All right, thank you, Luca. And now we turn to Nadia. What is your take on this? You have been listening to these gentlemen, so what is your reflection?
Yeah, I think it's really great to hear that we can, at least between us, agree on the fact that fossil fuels should be phased out. That being said, I think it's really important to keep in mind that that is not something that we're agreeing on globally. If we're looking at, these conferences that we are participating in today, then just at COP26, it was ambitious that countries could agree on phasing down coal, which is really insane that we at least haven't agreed on phasing out all kind of fossil fuels, including oil and gas. So I think this is really something that is important to keep in mind, and I think it's really important for all of us to agree on, this is important and we should push the policymakers, and I really think that it's a strong message that we across, generations and across people from private sector and civil society agree on this, but it's just important to keep pushing them. And then I think it's also really important that we keep pointing out what is the barriers, because when you read the energy outlook or the energy Bible, as I would say, then it can be quite positive when you hear about all the increases in investments, but there still is a lot of barriers, especially regulatory barriers. And an example of this is really with wind turbines, where it takes 3 times longer than needed to build the wind turbines because of regulations, and there's not enough bids and so many things like that, and also regulation that doesn't make any sense. And this is really something that we should point out and remove, because if we are in an energy crisis, then we also need to act like we are in an energy crisis. Thank you.
All right, thank you, Nadia. Very good. Now we go back to the finance minister. Iceland is also part of the Climate Coalition of Finance Ministers, and actually you were speaking at the meeting at the IMF recently, also addressing the global sort of audience. Why is it important that finance ministers are involved in this debate? Because this is basically a show of the environmental ministers and climate ministers.
Thank you. I think that bringing together fiscal and economic policymakers from around the world gives the opportunity of collective engagement on addressing the challenges posed by climate change, and this pushes us to find ways to address them by use of public finances. Let me say though, as another point, I find that sometimes we spend too much time on discussing the problem and leave little room for discussing solutions. And I miss being a finance minister. I miss having more feedback from the panels that I've attended on, pragmatic solutions. And let me give you an example. I think the transition that needs to take place in terms of just public transport brings great challenges. I told you about the incentives that we've given for new electric cars and hybrid cars. We give VAT rebates, and we don't have any tariffs when we import electric cars to Iceland, and this has been greatly successful. We are #2 in the world in importing new electric cars, after Norway only. However, this of course poses a challenge for the public finances. My revenues are dropping, and we are in a transition period where we need to come up with a new model for the electric carpool, so to speak. And so far, I have missed the, having those panels give feedback on best practices. But I think we all agree, those that are participating, that we can do better. And for us to move faster, I think we need to stop talking about the problem and focusing more on solutions. And that's an area where I most certainly believe the finance ministers can have great support from each other when they come together. Now, further large-scale action obviously needs and requires a broader involvement. Financial markets also need to play a significant role, and international cooperation and something we could call a collective effort is needed to secure what is needed for the green transition.
But if you think about the current situation, it's very challenging from the finance ministry's point of view, because there are multiple challenges. Europe is gliding into the recession, inflation is high, and actually much of the powder which the finance ministers had has been used during COVID also. So the public debt is high. So where do you get the money from for this green transition?
Well, I think, if we go back to our initial point, having your own energy security is not only an environmental issue, it is a macroeconomic security issue. And we are, in a way, sheltered as an economy, the Icelandic economy at the moment, from the energy price hikes that are taking place. The average household in Iceland is not under pressure because of new energy prices. Yes, oil has risen in price, and this affects also the vessels and other heavy transport, but at the same time, our export goods are gaining more value. We export a lot of fish. Fish prices have increased. Same goes for the energy-intensive sectors in Iceland. Their products, mostly aluminium, the prices have been high. So our economy has been sheltered from a lot of what has happened. And this is also one of the reasons why I always say that the energy transition is not only a matter of the Icelandic economy doing its part in reducing emissions for the good of the whole planet. It is also the final step for us to be fully green. We have very ambitious goals. Our goals are to be a reduction of 55% in CO2 emissions 1990 compared to 2030, net zero emissions 2040, and we want to be off fossil fuel in 2040, so that we are not reliant as an economy on fossil fuel by 2040, which means for the economy, we will stop basically importing oil or gas. We use very little gas, but we'll stop importing oil through tank ships, and we'll just produce our own energy locally, and we can do that, and the resources are here.
All right, thank you. Christoph, not all countries are in such a good shape in this, like Iceland, and you see the whole world. And I think there is also quite a lot of convincing the electorate of the benefits of the green transition, especially in the current situation. What is IEA doing to increase awareness among the people?
Thank you. About 2 weeks after Russia invaded Ukraine on the 24th of February, we released a report about how advanced economies in Europe in particular could reduce its reliance on Russian gas. And there was 10 different points within that, setting out what government should be doing in terms of reducing their reliance on Russian gas, but also what people should be doing. Soon after that, we released another report looking at how can we get off oil as quickly as possible, get off Russian oil. Of course, this involves things like driving less, car-free Sundays, using public transport, as long as it has the right support, as we've just been hearing. And then subsequent to that, we put together all of this to come up with a set of recommendations or suggestions on how people can play their part in terms of helping with addressing the energy crisis. And this was in terms of helping reduce emissions, of course, but also reducing bills, and also helping us to get off Russian energy as quickly as possible. And I won't go through all of the different points that were in all of those plans, but one of the things that really struck me was that prior to the invasion, we Europe as a whole, imported around about 150 billion cubic meters of gas from Russia. If everyone in Europe turned their thermostat down by just 1 degree, so from 25 degrees to 24 degrees, that would save 10 billion cubic meters of natural gas. So that just by itself would have an absolutely huge impact in terms of helping us to reduce our reliance on Russian gas. So there's absolutely a part that needs to be played by governments. A lot of the investments which are needed won't happen without the support of finance ministries and without the support of energy ministries and climate ministries. But also there is a role for people. And the key message for people is that doing some of these actions can both save you money and it can also help benefit the climate and reduce our reliance on Russia. Efficiency measures in particular have very, very short payback periods. You know, sometimes in a matter of months or maybe just a couple of years, if you insulate your house, you will be paying less in your energy bills, and it'll be a more comfortable house, and it'll be a more resilient house. These are sorts of measures that really we need to see people bringing about more and more so that we can get on the right track.
It is actually, if you look at the surveys among the population, global surveys, that what is always top priority, you have climate on the list, but it seems to be always pushed downwards by something else. First it was health, and then it was COVID. So there are other aspects, social aspects, economic aspects, which are very important for the people. How are these kind of different aspects taken into account in financing decisions?
Yeah, let me continue, because you brought in a very important stakeholder, let's say, which is people, right? Society. And I think in the Nordic Investment Bank and in Nordic Baltic values, we strongly believe that you're not going to get an energy transition unless you have well-functioning and well-being societies, right? That goes hand in hand. Now the energy crisis puts governments in a tricky spot, because you have a short-term, long-term balancing act, which is very, very important. Of course, you need to take care of the social aspects. You know, people need to be able to pay their bills at the end of the month. Companies and businesses also cannot go bust because of the energy situation, so you're going to have to help them. But at the same time, you don't want to remove those, again, pricing signals and markets that actually incentivize both the businesses and the people to do those energy efficiency measures. The payback reduces if the price is higher, right? So that fundamental market mechanism is great. Just to give you an example, even the CO2 price in Europe, in the ETS, we've always wanted it to be high. Back in Paris, we were like, let's get 100 euros a ton. Well, we got it now, and that's going to make a difference. So that's the way, through the price signaling, it's going to come into the financing, and it's going to make much more sense and bankable projects that accelerate the transition. That's where I also want to bring in the finance ministers. That's for me a critical role that you have, is to understand these moving parts and strike the right balance to keep the incentives to transition while maintaining the social safeguards for those who need it, right? Because we can't leave people behind. That's for sure.
And maybe I could actually continue with that question and ask the minister that, how do you see the role of international financial institutions in financing the green transition, and especially in the current situation?
Well, I think my colleague made a very strong point in that we cannot leave anyone behind. And because you mentioned, I was recently in Washington, and I see that all of the IFIs are extremely they're extremely willing to meet all needs. And the fact of the matter is, we are in so many. The different countries are in different situations. So in some countries, there is a lack of all resources to start doing the transition. But I see their role in helping economies maintaining their ambitious goals whilst they are fighting, in many cases, difficult macroeconomic situations. And I think the financial sector will play
a huge role in lowering in lowering carbon emissions, and it is necessary to support both the financial sector and those financial institutions to fulfill their potential. And in that respect, we recently, the Treasury of Iceland, we decided to support them with further financing. So we need to make sure that they have the necessary funds to finance the most effective investments. And financial institutions, and maybe especially IFIs, are probably the most effective agents to spur this development. They can bring expertise, they can bring long-term financing, and they can very effectively connect the public and private sector.
All right, thank you very much. There was also this mentioning leaving no one behind and balancing between these different objectives, and that's why I would like to actually turn to Nadia, because you are presenting the young generation. Is it youth which has been left behind?
I don't think we as young people are as such left behind, but I think it's really important that we are continuing to include young people, because young people play a huge role in actually, enabling the green transition to happen. We talk a lot about regulation and the economic systems and all those things, but I think something that is really important to keep in mind is we need people to work with it. We need people with vocational training. We need, electricians and all those kinds of people to actually enable the change to happen in real life. And therefore, it's really important that we encourage young people to take the right educations that are needed in the transition. And it's also really important that we ensure the young people that there are good and well-paid jobs for them. Because if we're not ensuring people in the fact that they can get a job, then I fear that we will get the people in general to be left behind. And this is not only young people, this is also people within fossil fuels industries and other industries that need to be transformed. If we are not promising them a society that there will be a job and a future for them, then we're leaving them behind.
Yeah, one question on this. When we talk about the young generation, there is very often talk about Greta Thunberg generation. Can you characterize the young generation as a Greta Thunberg generation? There's also a lot of discussion that the young generation is very polarized. You also mentioned that some could be left behind, whereas some would be the champions of this green transition.
Yeah, I think it's really good that you highlight the fact that we're really different. You also, you never hear people talking about the old generation as if they are all the same. You wouldn't do that, and not to say old, we can call it something else, young at heart or something like that. But yeah, we as young people are really different, and I think it's also a big challenge for me trying to represent young people, because obviously I need to figure out what is important for a young electrician living in another part of the country than I do. So that is really something that is important to keep in mind. But I think something that is also really important for banks and the financial sector is also to get more young people to be interested in finance. And the reason why I think this is important is that we as the people need to demand the banks and the pension funds to invest sustainable. And I think that is really something that is missing, because if you look at how many money that people are actually saving, especially in the Nordic countries because they're rich, there is enormous potential for investments in renewable energy and things like that. It just needs to be more simple for people to do that change. Me as an example, I figured out that I actually had a pension that I will need in whatever, a billion years with the current pension ages. And I think, then I figured out that I could actually go in on a website and change it to be sustainable. And that was something that, I did. But that is something that, my friends don't know. So now I'm suddenly a pension advisor for all my friends who don't know things like that. And then they're going in and changing it and taking higher risk, because why not do it when you shouldn't need it in the next year? And, that is also something that we need, people taking risk. And that could be young people like myself who don't really relate to my pension, but it could also be governments. And I think the role of government in taking risk is also something that is really important to highlight now that we have a minister here, because that is really a way of enabling us to also do the green transition in parts of society and parts of the world where it's not easy. For example, in the global south, in countries where there can be political unstable situations, or when it comes to us wanting to develop new technologies like floating wind or energy islands, then we need someone to take parts of the risk to enable private sector to also go in and invest in cases that wouldn't otherwise happen. So more public-private partnerships, and then also add another P, which would be the people. So public-private people partnerships is needed.
All right, thank you, Nadia. And now we can ask the minister, do you agree? And maybe after that, you could say that we take the final round of question. Everyone has the same question. Let's keep it simple, that what gives you hope in the current situation that we'll make it?
Well, I do agree, and if I pick up the point on governments needing to take a little bit of a risk, this is something that we have implemented into our legislation already. So green incentives. So we just say, if you invest green, we can give you an incentive in terms of income tax. You can also get benefits if you invest in R&D. So the latest big changes that we've made in Iceland is to spur R&D work, which often relates back to sustainability and lower emissions. And out of that environment, we are already seeing some companies forming in Iceland who have had a great impact. You know, let me name Carbfix as one example. You can look that up later, Carbfix. But I very much agree that we need to be forward-thinking, and we need to be flexible, and we need to work with people. And we always, at the end of the day, have to look at the impact of the average household life, and the young generation must also be outspoken. And I very much welcome the voice of the young generation here in this panel that is very much needed in the discussion we are having. So what gives us reason to be optimistic? I think we've shown, let's just take another example. Look at what we did in the COVID years. Look at the effort that was made by scientists and how they came up with the vaccines in a record-breaking time, and how many lives were saved. So when we pull our efforts together, I think we can make a huge impact, and it will grow exponentially. We just need to make sure that we're always on track. Every day we push forward, we talk together, we share good ideas, we have leaders to give good examples. And that's one of the things that we're trying to do, just to lead by example, and hopefully we can offer something to the world, although we are a small population, but we also are eager to learn from others, and participating in this panel is a part of behaving in that manner.
Great. And Christoph.
Thank you. Just to say, I'm much more hopeful now than I was 12 months ago. The response of governments to the catastrophic energy crisis has been very, very positive. We have seen real changes, and changes in the right direction, and the momentum is now all there. Clean energy is wind and solar in particular are the cheapest forms of new generation in most parts of the world. We are seeing a huge rollout in things like electric vehicles, growing at rates which previously weren't imaginable. And now, because of the energy crisis, we are seeing some of the things that people always thought that we should do on efficiency or on behavioral changes. Some of the things that people thought about but never actually got there, we're seeing those really starting to come about. So I think there's a huge number of things that we're seeing in the real world, from policies to people, which really are kind of giving hope and giving momentum on the pace of change.
All right, Luca.
Yeah, maybe I'm not sure I'm flipped that much in the last 12 months, but what gives me hope is that I think the stars have aligned, you know, in this terrible situation that we have had. I think fossil fuels now are an enemy for climate and to some extent an enemy for energy security. And so things are aligning, and that allows to turbocharge the situation. But I have to say it, when I look at the pace, I'm sorry, we are still not there. We need at least 2 or 3 turbos. So you had a few numbers that you mentioned, and so the gap, even now, is still there. So we need to accelerate even further.
All right, thank you. And Nadia, you will now get the last word. And I promise I will say only thank you after your last conclusion. So please.
Well, thank you so much. So there's 2 things that gives me hope: collaboration and action. And I think the reason why I mentioned collaboration is that no one is going to change this alone. And earlier we have seen that it has been too much people looking like themselves, talking with each other, and that is really not going to change the world in the pace that is needed. So we need to come together across generation and across society and work on these solutions together. And then secondly, the reason why I mention action is also that conferences like this is not really what always gives me hope, because there are a lot of pledges and a lot of words, and you know, we have a lot of pledges, we have a lot of goals, we know where we're going and we know where we should go. So what gives me hope is when I see a wind turbine being built, or when I see local communities changing their habits and, you know, use the energy more efficient, and when things like that are starting happening, then this is something that gives me hope. And that is also something that we should continue doing, and we should continue, you know, demanding that things change. And yeah, thank you so much for the panel today, and I've been really honored by having the opportunity to speak with you. Thank you so much.
Thank you.
It's not now we hear me, yes. So, Excellencies, ladies and gentlemen, a warm welcome to all participants who are joining us here in this room today, and also for everybody joining us virtually from across the globe for this very important high-level event entitled Strengthening the Data Foundation for Effective Climate Finance, the Systematic Observations Financing Facility, SOF. It's great to see such high interest in this topic. And this event is co-hosted by WMO, UNDP, UNEP, and the Nordic Development Fund, which is one of the first funders of this initiative. And the fact that we're gathered here today in the Nordic Pavilion is a sign of the strong interest and leadership of the Nordic countries in this initiative. And I'm Henrik Franklin, a director at the Nordic Development Fund, and I'm also the co-chair of the SOF Steering Committee, and I will be your moderator for this event. And the main theme of COP is, of course, to accelerate climate action and to increase climate finance. And SOF is a very good example of this. 1 year ago at COP26 in Glasgow, this initiative was announced. And today, 1 year later, SOF is fully operational and ready to deliver and narrow the gap in climate and weather data, which underpins all climate action. And I want to recognize the hard work behind the scenes of the SOF Secretariat under the able leadership of Markus Repnik, and the UN Multi-Partner Trust Fund as the trustee for this initiative, the steering committee, advisory board, and all stakeholders involved. And I'm particularly pleased to announce that last week the SOF steering committee approved the first batch of 26 countries that will be receiving support from SOF, and many of you of these countries are represented here today or virtually. So during the next hour we will have many distinguished speakers and who will share different perspectives on this important topic. And in fact, we have 17 speakers, so I really ask all the speakers to be succinct in your interventions. And now I invite WNO Secretary General Professor Petteri Talas to give opening remarks. Welcome.
Thank you. Thank you, Henrik, and welcome also on my behalf to this event. And it's a great pleasure to see so many of you present here. And if everything goes well, you will deserve some drinks and something to eat afterwards. This SOF is very important tool to improve the basic observing systems where we have major gaps in African countries, Caribbean, Pacific islands, and in meteorology we say that if you put junk in your forecasting models, you get junk out, and that's the situation at the moment, that we are not able to provide high quality early warning services to those countries where we don't have basic information available. And that's also a problem for climate science. For example, if you read the most recent IPCC report, it's demonstrating that we cannot say in many parts of the world whether we have seen changes in flooding or drought events. So this is also needed for the climate proofing. And thanks to SOF, we have been able to attract the attention of Secretary General Guterres, who has tasked us to prepare a major early warning service initiative, which was launched here on Monday at the presence of him and also several heads of state. So now we have wider package than just SOF on the table to improve the all early warning services worldwide. Only 50% of our members have proper early warning services in place, which means that when a high impact weather event hits those countries, the damage, both human losses and economic losses are higher. But first we have to invest in the meteorological and in the future also hydrological infrastructures to be able to provide good services. And we are most grateful for those donor countries and our partners who have already decided to commit some resources, and as Henrik said, already some countries will be financed in the near future because of those funds. And we have heard lots of positive news from many countries that we expect that there will be more resources floating. Many thanks for that, and many thanks for coming to this event. Thank you.
Thank you, Professor Talas. So if you can stay on stage, please, and we're very happy to invite Kristalina Georgieva, the IMF Managing Director, on stage And a big round of applause. We're very honored to have you joining this important event. And Ms. Georgieva, you have vast experience in the area of finance, economics, and on a daily basis you engage with governments, partners. How would you say that climate and weather data is also economic data?
Good evening, everybody. Great you're coming for this discussion, because this is one of the smartest investments that can be made. Our analysis shows that we can significantly, of course, reduce the cost of damage somewhere between 3 and 8 times if there is a system to provide information in a timely manner. And we also know that this is becoming by the day more important. Last year, weather-related damage exceeded $250 billion, and this is not the most expensive year in history. And of course, developing countries are hardest hit. At the IMF, we are engaged in 3 aspects of related to this initiative. First, high-quality, reliable data, so policy planners can make decisions based on this data. We are a big part of initiatives related to closing the data gaps, including the G20 Closing the Data Gap initiative. And 2, we are very interested in getting not only the hardware, but getting training, capacity building, institutional development. And I understand that with the systemic observation financing facility, this is one of the objectives. Why this matters? Because strong institutions are the foundation for strong policies. If you don't have people trained, you don't have institutions that can operate, then doesn't matter that you are collecting the data. Data becomes useless. And 3, we are looking at the events of the last years. We all have seen how import disruption of food has caused massively increase in hunger. Many developing countries, because they don't have predictability, reliability of domestic food production, they have to rely on imports. 85% of food comes from somewhere else, and that makes no sense. Africa can feed Africa. That is so important, but for this to happen, the reliability of data for agricultural production, for small farmers, for large farmers, that is absolutely critical. So bravo for what you do, and now the mic returned. When it came to bravo, boom, it comes. But sincerely, bravo, and please do work hard to make it faster available everywhere, but especially on the African continent. Thank you very much.
Thank you. Thank you so much, Ms. Georgieva, and thanks for your support. We really appreciate it, and thanks for bringing up the importance of this kind of data for decision making. And I mean, you've been a strong supporter of SOF from the beginning. You mentioned some of the basic ingredients, but was there something particular that you want to emphasize or mention on this initiative that strikes you as innovative? Or
what I find most useful is coverage, because to have data in one place and functioning institution in one place but not in another is actually handicapping those who do have the data. So I understand that the objective is to get 20 countries covered fast. I would love to see us taking a I don't know what I do with these mics. I would love to see coverage, and for this reason I see many here that are likely funding this initiative. You're doing the right thing, small amount of money, huge benefit. and we have to aim for coverage. So actually the aggregate data allows artificial intelligence to be put to work for improving agricultural productivity, transport links, and all that is there from an economic standpoint. So if there is somebody here still hesitant, I don't know, should I do it? Do not hesitate, please do it. $1 invested in weather systems, at least you get $16 in return. Thank you.
Thank you.
Yeah, we want to thank IMF Managing Director and Professor Talas for joining us today. Thank you so much. Yeah. Now we're going to move on to the next segment. We're going to have a few different segments in this event. The next one is going to talk about how we can close the gap of basic weather and climate data. And I invite Ingrid Anderson, the UNEP Executive Director. Do we have Florian Pappenberger? Yeah, if you can also join, please. And Niri Vololona Rahilo Jau from Madagascar. And I'm not sure if we have Florence joining us. Is somebody joining us? Yeah, we have some Florence Rabier as well. But let's start. Yes, I will start with you, Ingrid Anderson, the UNEP Executive Director. Thank you so much for joining us today. And UNEP has been putting a lot of emphasis and work on sort of bridging this gap in climate and weather data. So interested to know a little bit why that is so important, and most importantly, why you have joined forces with WMO and UNDP in co-creating this groundbreaking initiative.
Well, look, I mean, I think we all understand that without weather data, you cannot invest. If you are a farmer and you have to put your seeds in the ground, you're not going to waste your money if they're going to wash away. If you're a farmer and you have to de-stone your lands so that they can be plowed with oxen, horse, or machinery, you're not going to de-stone unless you know maybe entire work is going to be washed away. And if you don't have that information at your fingertips, it's absolutely clear that you're going to lose money. You just heard from the managing director of the IMF that this is absolutely critical. And so we from UNEP, from the very get-go, we're very proud to join this initiative, because good environmental management, good water management means good meteorological information, because those are the very basis upon which economies grow. And that's what we want. We want stable climate, absolutely. We want to close that gap, absolutely. But we want to bring down poverty. We want to see thriving economies. We want to reach the development goal, the sustainable development goals. So right now, our policies, the current policies that we have in place, are driving us to a world in 2100 to 2.8 degrees. When we take the NDCs, yes, we reach 2.6. We take the conditional NDCs, for which there is not enough money, we reach 2.4. So with that scenario, which is unacceptable, and we have to decarbonize and we have to invest in adaptation, we must have this financing, because that scenario is one that will slap the very poorest, pull the environmental rug from under their feet, and not enable these communities to thrive. So we're very happy to be in this partnership with our friends from WMO and from UNDP, and we give a huge thanks to all the donors who've already put money on the table, or promissory notes. We will cash the promissory notes, and we will ask for more money on the table. Thank you very much.
Thank you so much, Ms. Anderson, for that support. Now, continue on this topic of narrowing the gap in climate and weather data. I think we have Dr. Florence Rabier connected with us on the screen. I think she's the Director General for the European Centre for Medium Range Weather Forecasts, ECMWF. And this center is one of the global centers that translates observational data that comes from different parts of the world into forecast products. And as a director of this center, if you can please share to us why you're such a strong advocate for SOF.
Sure. So first of all, it's a pleasure really to attend today. And I'm sorry I couldn't be with you. But really, we cannot stress enough the importance of observing the Earth. And observations are the basic ingredient to produce global weather and climate information, which is what we do indeed at ECMWF. Sorry. So we are an intergovernmental organization. We were created in 1975 by a joint European effort to push the limit of weather prediction to help society. Today we are supported by 35 states, and we predict the weather weeks and even months ahead. We also monitor the climate because we are operating the European Union Copernicus Climate Change Survey. So better observations enable better global forecasts around the world, which also enable better local forecasts, applications and services that in turn, of course, can be used to prepare for extreme events and for planning, as we were saying for our agriculture before, planning for specific climate conditions, environmental conditions. And ultimately, better forecasts can benefit everybody. So all the steps are linked. So today we know of sophisticated systems and apps available at our fingertips that massively enhance our experience and use of weather and climate information. But they all work thanks to the existence behind the scenes of a vast network of observations collected, exchanged, and coordinated worldwide. So while we rely today on a large number of satellite observations, surface-based observations continue to be an essential factor for the improvement of weather forecasts. And the most precious surface-based observations are the ones coming from the areas of the world where we currently have less of them, which are the least developed countries and the small island developing states, which is why ECMWF fully supports the SOF initiatives that aims to fill this gap. And we do believe that supporting SOF is a worthwhile investment to ensure that our world is better prepared for the climate crisis and the environmental challenges ahead. Thank you.
Thank you so much, Dr. Rabier. Give a round of applause. And now I think this nicely connects us to our next speaker, who we're very privileged to have, and we will focus now a little bit from the field perspective. So Dr. Niri Volulana Rahilujao from Madagascar. You're the Director General of Meteo Madagascar, and your institution is responsible for collecting and also disseminating across the world, the data that comes from your country in terms of climate and weather. And we heard now that the data that comes from your country feeds into the kind of systems that we just heard about. So what are some of the challenges you face, and how do you see SOF bridging some of the gaps that you have in your country?
Thank you very much. Good evening, everyone. I'm here as a PR of Madagascar, but I'm speaking not only on behalf as a PR, but I'm considering myself as a spokesperson for all my colleagues from the small island developing states and the least developed countries who have suffered from this long-lived degradation in the National Observation Network. As you know, Madagascar has suffered a lot this year, because of extreme events. And unfortunately, Madagascar has a large gap in surface observations. And during this tropical cyclone season and during tropical cyclone alert, Meteo Madagascar is a major consumer of ECMWF product. But for example, for our climate outlook, we use the ECMWF long range on tropical cyclone activities. For our subseasonal tropical cyclone forecasting activities, we also use these extended forecasting products from the ECMWF. And it is not only it's also not only a gap in surface observations, but because of this transition from manual observation station to the automatic observation station, we have also a gap in human resource who have skill for the maintenance. So the gap is also because of this lack of periodic maintenance. So I think that, as you know, this year, Madagascar, as I said, suffered a lot from extreme weather events. For example, from January up to March, Madagascar was hit by 6 tropical cyclones, including 2 intertropical cyclones in less than 2 weeks apart. And unfortunately, we had more than 200 deaths and more than 450,000 victims. But I do believe, I am convinced that if the surface observations system and the forecasting system could be improved, we can reduce this painful impact. And I'm convinced that the implementation of SOF will really help all these countries in need to improve their national early warning system, their regional early warning system, and also global forecasting system. So thank you so much for the donors for considering all these countries in need in the implementation of SOF. Thank you very much.
Thank you so much. Now I'm going to turn back to the ECMWF, to Florian Pappenberger, the Deputy Director, and you work specifically on forecasting there. So how will closing these gaps in least developed countries and small island developing states help develop better forecast products?
Thank you. That's quite difficult now to follow up because you've heard it all, eh? You heard don't dither, don't fuff around, just invest. Easy. You heard it that they will improve forecasts. They will improve weather forecasts, they will make the life easier, they will make the products and the forecasts easier. But it's more than that. If you're just thinking of weather forecasts, you're too short-sighted. We're going to improve the forecast of the Earth system. And not just that. We're going to give countries access to data which they currently don't have. They will be getting freeze and WF data, boundary conditions, we just talked about it, for example, previously, to allow them to do better ground forecasts themselves. This is so much more in terms of impact than just weather. Of course, we have to measure that, and we have to see where the cost-benefit lies, but I think we will in the end have products which are so much more than ever before, particularly because, as Florence said, we're targeting countries where there's currently far less observations than we actually want to have.
Okay, great. Thank you so much for these interventions. So let's give them a big round of applause. Thanks a lot. Let's now move to the next segment. I invite Usharao Monari. I don't know if you're connected from UNDP. And we also have the State Secretary from Timor-Leste. Welcome on stage. And we also have a representative from Mozambique who is with us here as well. Yeah, welcome. So now we're going to focus, it's mentioned that SOF is an innovative approach to addressing long-standing problems and getting good weather and climate forecasts. So let's start building in developing countries, including in this important topic. So similar to the way I asked Inger Andersen from UNEP, why has UNDP joined forces with WMO and UNEP to launch and get SOF going? Over to you.
Thank you. Thank you very much. I hope you can hear me, and I'm sorry I'm not there in person at the moment. I will be there next week, however. But just to get to the point at hand, many comments have already been made. We are, at UNDP, a very proud partner and co-funder of SOF. And the reason for that is I believe SOF is serving a very innovative need in what is today an increasing part of our daily lives, which are weather-related disasters and disaster events. Kristalina spoke about the cost of damage due to such events, and how if you don't have the correct data to measure them, to prevent them, to manage them ultimately, it will cost us a lot more than what we are even imagining today. So I think SOF is addressing a need, and that need was that there was always, and there has been, a lack of comprehensive, broad-based, country-level data that is required in order to take preventive action and to manage disasters as and when they occur. And why is this important, and why is it important from an innovation point of view? Because such prevention and management is vital for livelihoods. I think Inga spoke to this. It's vital for livelihoods, it's vital for environmental and planetary management. Quite frankly, it's vital for economic growth. So I think the UN Secretary General made a call for action for everyone on Earth to be covered by an early warning system in the next 5 years. the SOF will be an integral part of this effort by financing the hydrometeorological infrastructure that is one of the 4 pillars, frankly, of a people-centered early warning system. I believe that the SOF and its partners have a huge role to play in this at the country level and, frankly, at the global level. And I hope that many more people join this excellent effort. Thank you very much, and back to you.
Thank you. Big round of applause to Ms. Rao Monari from UNDP. Thank you very much. So we are very privileged to have 2 countries represented here, which are among the first to be supported by SOF. We have Timor-Leste and Mozambique. And we're very honored to have Honorable Demetrio de Amaral de Carvalho, the Secretary of State for Environment of Timor-Leste. And we're very interested to hear from you, from your perspective, how SOF will make a big difference in your country.
Thank you. I'm very glad to join these discussion sessions, especially for Nordic Development Fund, World Meteorology Organizations, and UNEP for hosting these important discussions. I'm coming from an island nations. The size of the island nations is 15,000 kilometers square with 1.3 million populations. In 2020-2021, we have a big impact from climate-induced disasters. And the cost of the event today, in terms of the cost, about 500 millions loss of infrastructures, schools, and important basic infrastructure for the country, including about 44 people lost during the event. Why it happened? Because we don't have proper weather and climate forecast system to predict and giving us quality information to prevent the risk, minimize the risk for the people. So we see that country like Timor-Leste that very affected by climate-induced disaster, we really need to have technology, such technology and finance to develop our climate and weather forecast system. We have a first project funded by Green Climate Fund for early warning system, implemented by UNEP, but we still have gap to finance more equipment, more technology, and we hope by the commitment from SOFT, we will what we call able to cope the event in the future. And thank you for all of the Nordic countries that make this fund possible. Thank you.
Thank you, Mr. Secretary of State. Very, very good to get feedback from you from the field perspective. Now we turn to another country, which is Mozambique, and we have a statement from Mateus Magala, who is the Transport and Communications Minister of Mozambique, that will be delivered on your behalf, Aderito Aramuge, from the Institute of Meteorology of Mozambique. Over to you.
Thank you. Good evening, all present here. Of course, due to lack of time, I will not read all the statement. But what is important here to mention is that Africa, SADC, and Mozambique in particular, there's a need of a bridge the gap between early action and early warning and early action. Obeying the challenge that WMO, when I say WMO, is not the Professor Peter Tales, but all members of WMO, we have this challenge to, during 5 years from now on, to come up with a establishment of a early warning in all countries. How do you do that without financing? If we go country by country in Africa, if you ask for the permanent representative, the only big challenge is lack of funds, lack of budget. So if we need to achieve in 5 years the early warning in all of these African countries, so the partnership is necessary. There's this African say that says, if you want to go fast, you go alone. If you want to go far, we go together. So we cannot go alone without partners. So SOF is a kind of partner also. If this kind of financing go to other countries, so it will somehow say it will try to reach what the United Nations Secretary challenges to WMO. But of course, as I see, they are not all the countries that are benefited in this first phase. So what about other countries? So there's a need as with WMO, as a meteorological community also to go and mobilize the funds so that we can have this early warning established in our meteorological service. We cannot talk about early action without early warning. Everything starts with med service. Despite that sometimes med service is being forgotten, left behind, but we are the first ones in order to come up with a very good early action. If the information from med service, from early warning is not accurate, all the action needed for planification in other sector will not also be accurate. So investment in meteorological service is very crucial. Apart of that, the responsibility of high-level commitment, starting from the president of the country, minister going down, is necessary, because those are the ones who, at the time of dividing the money, say, this is for you, but when the few amount of money remain, they say, this is for med service. So we needed to change these things of V or C the thing. So investment in med service is really crucial. So SOF is coming in a very good moment so that we can achieve what was the challenge for World Meteorological Organization in one side, and also for the United Nations Secretary General. Thank you very much.
Thank you so much. So we've heard from the governments of Timor-Leste, Mozambique, and the work of UNDP, so thank you very much for joining us today. Now we're going to go to the next segment, which is also very important. I want to invite Leslie and Lobu from the Africa Risk Capacity. We're going to talk about how the private sector can benefit from better climate and weather data and forecasts. So let me start asking you, and welcome to the scene, Leslie and Lobu. You're the CEO of Africa Risk Capacity. So how will Africa Risk Capacity Insurance Company, and more broadly the private sector in Africa, benefit from better weather and climate data?
Thank you very much, Henrik. When I got the invitation to talk about data, I was very excited because I am a data nerd. But since I have only 2 minutes, I will stick really to the essentials. We run insurance programs for 30 million Africans each year. Our insurance programs are underpinned by data because they are parametric in nature, which means that we're able to model the size of an economic loss from a drought, from a flood, or from a tropical cyclone. We then are able to pay claims within 10 days because we don't have to go through the very long loss adjustment process. This ability to pay claims very quickly is crucially important because responding and intervening early improves significantly the outcomes. However, all the good work that we are doing is in fact underpinned by the quality of the data that we have. We don't want to have an insurance product that pays claims when it shouldn't, because it will become too expensive for our customers. On the other hand, we don't want to have an insurance product that doesn't pay out when it should, because we will undermine the confidence that our clients have in our insurance programs. Therefore, we are extremely delighted by the SOF, and we are grateful to all the donors that are funding it, because it will enable us at the African Risk Capacity to have more accurate insurance programs, which will be calibrated at the right price and will really gain the trust and the confidence of our clients. So thank you very much. I really appreciate that.
Thank you so much, Mr. Nlovu. And you're actually welcome to stay with us here, because I'm going to make reference to Africa Risk Capacity again, because your company is a member of something called the Insure Resilience Global Partnership for Climate and Disaster Risk Finance and Insurance Solutions. And the SOF Steering Committee has decided last week that SOF should become a member of this partnership. And the reason why we have Dr. Jürgen Sattler from he's the Director General of the German Ministry for Economic Cooperation with us is because your government has been a big advocate and fostering this partnership. So what is, in your mind, why is it important for SOF to become a member?
Yes, thanks a lot, and it's a pleasure to be here. We are working closely already for years with ARC, and now we are happy to support the SOF. So 3.5 billion people, livelihoods are threatened by climate change in the future. Many of them are in developing countries. But when we look at extreme weather events, the damages they do are very different when you look across the different countries, and it depends a lot on the protection they have. For example, Bangladesh very much improved the situation, so you can do a lot. And what we need is collective action and solidarity. And in order to organize that, we have to organize it. That's collective action. We have to organize it in a collective level. Kristalina talked about institutions. So we need an institutional architecture to tackle with that problem. That's the new world. You know, it will happen all the time, and we have to get prepared for it. The SOF is at the beginning of and an important part of this new institutional architecture, because early warning is early, so it's on the start. We need the data, therefore we need SOF. But SOF should be part of the architecture. And we are very happy to see that SOF joined the Insure Resilience Global Partnership. This has been established, Germany has initiated years ago, but we are working closely with ARC. And only since 2021, the Insure Resilience Global Partnership has helped 150 million people. It's only the start, but there we already joining hands. So what we suggested now and discussed now with many countries, in particular the V20, the vulnerable 20, Timor-Leste, for example, is part of it, but also Pakistan, is to build a global shield. You might have heard about that. A global shield which protects us against climate-related risks. And this global shield is, you know, putting all the elements together we need for the future. And SOF is at the beginning, it's early warning, and then we will have all kind of instruments, for example, also debt instruments. Kristalina, IMF plays a role there, for example, which allows countries to suspend debt payments once the crisis hits. So all these come together, so-called pathfinder countries, Pakistan one. We discuss with the government, what do you need in order to this comprehensive protection. SOF will be at the beginning, and then there will be all the... I think that's one suggestion, that's one approach. It doesn't solve all the problems, but I think this can be another important building block, and thanks.
Excellent, thank you, Dr. Sattler. So it's very exciting, actually. Today we're going to witness the signing of the agreement between WMO Secretary General Petri Talas and Dr. Jürgen Sattler. So let's allow a few minutes for this signing of this agreement. and we'll stand here as witnesses. A big round of applause. Thank you. Very exciting to see this partnership taking birth. Yeah. Yeah. Okay. Thanks a lot. Thank you. Okay. Now we're going to come to a very exciting part of the segment. We're going to turn now to financing and funding of SOF. And SOF has taken off with initial support from 7 partner funders, namely Austria, Norway, Ireland, Finland, Denmark, Iceland, and the Nordic Development Fund. And also very recently the United States has joined, and as recent as 2 days ago Spain also has joined. So this is fantastic progress, especially since all of this has happened within 1 year. And we hope that many others will also follow on as funders of this great initiative. So what we're going to do is we're going to invite the ministers one by one. And I know some have some other events, so we're going to start with the Minister of Ireland, Mr. Simon Coveney, Minister of Foreign Affairs and Minister for Defence of Ireland. Very great to have you here with us. If you can share why Ireland is supporting SOF.
Well, thank you. And first of all, can I say I'm really privileged to be here. When you live on an island in the middle of the Atlantic Ocean, the weather matters. You talk about it a lot. And if you're fortunate enough to have the resources to do it, you invest heavily to ensure that you can rely on weather forecasts and weather mapping. And we've done that in Ireland. And it's made an enormous difference in terms of how we respond to weather systems that come in from the Atlantic Ocean and impact on flooding events and many other impacts of more extreme weather that we're seeing in recent years. And so when we saw this project come together, we know that it represents extraordinary value for money to invest in weather technology. And that's what this is about. This is about ensuring that sponsors can allow countries in parts of the world that are deeply impacted by weather events to actually have more preparation time and more understanding as to when those events are likely to occur. That allows us to help countries limit loss and damage from more extreme weather events. And while, of course, countries like mine need to fund the response in terms of loss and damage, we also need to invest in projects like this to ensure that we enable countries to be able to create early warning systems so that people can help themselves in terms of responding to weather by understanding what's likely to come tomorrow, next week, next month, and even further afield. So we are delighted to contribute €4 million to this project. And not only that, but we're making the first million of that commitment available this month. So to everybody who's involved in this project, we think it represents fantastic value for money, and we think this will save lives. We think this will save livelihoods, and we think this will allow countries to prepare for the extreme weather systems that unfortunately are now inevitable and can, in a dramatic way, disrupt quality of life, undermine livelihoods, and even cause catastrophic events that can cost lives. So to the people who are putting this together, thank you. And we are delighted to continue to fund this project into the future, and we look forward to its success. Thank you.
You're welcome to stay on. Oh, you have to go. Yeah. Thanks a lot for joining us. And really, Mr. Minister, we appreciate the support from Ireland. Now I turn to Austria, who is the first bilateral donor country to approve financing for this initiative. Honorable Dr. Magnus Brunner, the Minister of Finance of Austria, great to have you here. If you can also share with us why Austria thinks SOF is an important initiative and why you're financing it.
Yeah, thanks very much, first of all, for the invitation to this very special event, and also for the very interesting insight we got this evening for the interventions. That was very interesting for us, I think. Why is Austria doing that? Because it's very important, as we just heard before, and we are very proud, actually, that we have been supporting SOF for the last, for quite a while, I would say, and as you mentioned, being one of the first countries supporting SOF. That is important, and we are continuing doing it. Of course, I'm not talking about the content now, because that has already been done by the experts. But I can just announce, not just because Kristalina said it's a smart investment, but we're doing it anyway. I can announce to invest 2.5 million this year even. And I think that's very good and very smartly invested money, as we heard before, so then you do in future. Thanks very much.
Thank you, Minister, for the support from Austria. You're welcome to stay on stage if you want, because we're going to have other ministers. It's nice to show that the support is gaining momentum. So in that context, I invite Minister Ann Beate Tvinnereim from Norway on stage, and welcome. And 1 year ago at COP26 in Glasgow, Norway expressed its pledge and to support this great initiative, and in the meantime the financing has come through, and it's fantastic. So we want to also hear from you why you're supporting SOF.
Thank you, Henrik, and thank you to everyone who's here. Early warning or MET services is essential to save lives, to save livelihoods, but you know, it's also crucial to make that whole ecosystem of preparedness work. And in my part of the world, we are very used to it. We take it for granted. If you don't have the MET services as a basis, you can't have insurance, you can't have all those early warning systems and institutions in place. So we have to get this to work in all countries, all over the world, in the SIDS, in the least developed countries. And that is why this is so extremely important. From the Norwegian side, I'd also like to emphasize the soft part of investing in MET services. This is not only infrastructure. You know, we need to get capacity building out there, people who are able to man the weather stations and all these, you know, all along the value chains to get the information out there to the fisherman, to the farmer, to everyone. So that's what I wanted to emphasize. In June, Norway made an extra contribution of 25 million Norwegian crowns, which is approximately $2.5 million. And I'm happy to announce that for 2023, we will double that contribution to 50 billion. Thank you.
Fantastic. Thank you for the support from Norway. Very encouraging news. And we also have the United States recently joining this initiative. Warm welcome on stage to Monica Medina, State Department Assistant Secretary for Oceans and International Environmental and Scientific Affairs of the United States. And again, it's fantastic to have the United States joining and seeing this partnership growing across the globe. So why does the United States want to finance SOF?
Thank you so much, and thanks to you all for organizing this event. I'm a certified weather geek, so I'm especially thrilled to be representing my government here, and we're very excited not only to be joining, but to be joining the steering committee of SOF. So thank you very much for welcoming us. The U.S. has been a leader in global weather services, weather forecasting. I think we're interested in this because for so long people didn't even know it was possible to make these kinds of medium and long range forecasts, in addition to the immediate forecasts that we are already so able to do in our country that we would like to see other countries able to do. So I think the one thing I can add is that what we love particularly about SOF is the emphasis on women and including women in the science and in understanding that women are particularly impacted by climate. So in addition to all the other remarks about saving and sharing, we are particularly thrilled to be a part of this. And I wish I could tell you the number of our contribution, but our President Biden, is actually coming here in 2 days, and he will be making the announcement himself. So I cannot steal his thunder. so to speak. But I will promise you that it is a very worthwhile investment for us. We're thrilled to be making it. We're thrilled to be part of SOF. So thank you very much.
Very exciting. Thank you so much for this confirmation. And please stay on the stage. So again, very much appreciate the support from the United States. And another funder who is very recently committed support for SOF is Spain. And it was 2 days ago at the Heads of State meeting where the President of Spain also announced that they will be supporting SOF. So unfortunately they can't join us here, but I have a brief statement that I will read on behalf of the government of Spain, which says that SOF represents a unique opportunity to close the data gap that hinders effective climate action from a local to a global scale, especially supporting those countries where adaptation is most needed. This is a moment for us to scale up action and ambition. We can't deliver with the highest effectiveness if we don't have the fundamental information to guide our actions, to turn our ambitions into attainable goals. After Spain's Prime Minister announced last Monday in a COP27 event a contribution of €3 million to SOF, we are proud to join the group of SOF funders and look forward to supporting this groundbreaking initiative. So thank you very much to Spain for that. And now we have the Minister of Finance of the Netherlands, Sigrid Kaag, to please join us here on stage. And it's very encouraging that we have two Ministers of Finance with us here today from Austria and from the Netherlands, sort of showcasing the importance of weather and climate data for economic decision making. And Minister Kaag, I understand that you will be taking over the role as co-chair of the Coalition of Finance Ministers for Climate Action, which is a coalition of 78 finance ministers from across the globe. So very, very interesting role. So from your perspective, why is SOF so important?
Well, I think when I was listening, and great appreciation for all those who spoke, actually the concept is on the one hand so straightforward. We have to ask ourselves the question, why didn't we establish it before, and what took so long? So I think that's a collective lesson to all of us, because we preach data in everything, in health, education, prevention of whatever kind. So if we're talking about the impact of weather and the ties to economic and financial consequences, we could never have done this without data. So it's a category no-brainer, as they like to say in the US. That's one. Secondly, data also builds the evidence base, but also the predictability of our actions. And I think what we need to make sure is that the data gets used by ministers of finance, but also financial actors are asked and tasked to use the data as they plan their insurance schemes, as they make their investments, as they provide for their forecast, because it has to be applied throughout. Now, the Netherlands is really actively wanting to support SOF. I can't tell you yet how much. We don't have a president, we have a king. He won't be coming, but my colleague, the Minister for Trade and Aid, is determining the final amount. But of course, as Minister for Finance and Deputy Prime Minister of the Netherlands, I'm very keen to use these building blocks in the discussions with all Ministers of Finance on climate change to showcase how it can be done, how it should be costed to save lives, to prevent worse from happening, but also to provide for the adaptation and have the financing available to precisely do that. So thank you very much, and congrats to you.
Thank you, Minister, and very encouraging news. And also we look forward to hearing further on you. And you're, of course, very much welcome as a donor coming forward. So really a big thanks to the ministers and the Assistant Secretary for joining us. A big round of applause. Thank you. Okay. Yeah, I think I can. He's on his way. Okay. Yeah, I think we're waiting for one final guest of honor. Let's give it maybe 1 or 2 minutes to hear that. I think it's been a great conversation on different perspectives, from the field perspective, from Timor-Leste, Mozambique, hearing how that data is translated and used for forecast product development. Also hearing from ministers from different donor countries on why this initiative is so important. But I think let's, Marcus, I think let's continue and just say that we want to recognize the importance of the Early Warning for All initiative, which has been launched by the UN Secretary General, and Mr. Hart, who is the advisor to the UN Secretary General on climate action and just transition. Has been driving this for a long time, and his leadership is really extraordinary. So we just want to highlight that in his absentia. Hopefully he can join us for the reception afterwards, but just to recognize Mr. Hart's hard work in getting that initiative going, and for how important the SOF is as a foundational element of the Early Warning for All initiative. So, sorry? So yeah, let me take this moment then to thank all the distinguished speakers that have joined us today to share their perspectives and different angles of this groundbreaking initiative. And also to thank the SOF funders and all the partners for the support, which has enabled us to be where we are today, and we're quickly gearing up to deliver on the ground. And we look forward to the continued support. And in the spirit of this COP, which is really to accelerate climate action, I think SOF is a good initiative to that, and I think it's really thanks to all the hard work and support from many partners. So thanks to everyone, to all the speakers, to all the partners, funders, and to all of you that have also listened in. And I want to say that you're all welcome to stay for a reception, which will also be here in the Nordic Pavilion, which is a Nordic finance reception. So please stay on if you want to continue the dialogue. And let's finish with a big round of applause for everybody. Just in time, great. Mr. Hart, welcome. I was just mentioning to the team here of the great work that you're doing in the United Nations to get the Early Warning for All initiative off the ground, and also the tireless work of the UN Secretary General on this important topic. So now that you joined, you want to share us a little bit of what is your motivation to tirelessly work towards this, making sure that everybody on this planet has early warning capacity, and how you see SOF as a foundational element of that?
Thank you so much, and it's really a pleasure to be here with all of you. And this has been a great week thus far. We have a new number. It's not 1.5, it's 100%. 100% coverage in 5 years. And I want to thank Petri and his team at WMO, my good friend Paul, really for taking forward this bold and ambitious proposal and initiative by the Secretary General. One of the really unfortunate consequences of the climate crisis is that its impact is being felt by those who have contributed least to the climate crisis. What struck me, and I say this virtually every day, is what struck me most from the IPCC report on vulnerability and impacts is that if you're living in one of the global hotspots of the climate crisis, namely in Africa, South Asia, Latin American region, or on a small island developing state, you're 15 times more likely to die from a climate impact. And we know that early warning systems, they save lives. So for me, the motivation is to save lives, to save the lives of those who are on the front lines of this climate crisis, who've not contributed the least. SOF will be an important and critical component of making this happen. We need you to help us to scale up finance. We need you to ensure that the solutions that you're working on and the initiatives in countries that need these systems, that we deliver them at pace and scale. So I am excited, I'm enthusiastic. You can see it is not because I ran all the way over, but because we have an opportunity of a lifetime, the opportunity of a lifetime to save millions of lives. And it's a small investment, 3.1 billion. 3.1 billion. Compare that to the trillions mobilized to fight COVID. So, colleagues, we can do this. I'm excited. SOF will be an important partner and player to make this happen, but we require all of you to ensure that you keep all of us accountable for delivering on this 100% coverage. So thank you so much, and I look forward to working with you guys over the course of the next 5 years.
Thank you very much, Mr. Hart, for your strong commitment on this theme and also for your strong support for SOF. So I think with that compelling conclusion and finalization, I want to thank all of you on behalf of the hosts of this event, WMO, UNDP, UNEP, and the Nordic Development Fund, for joining us this evening and connecting in the morning or afternoon, wherever you are in different parts of the world. And you're more than welcome to join us for a Nordic finance reception starting in a few minutes in this pavilion. So thank you so much and have a good evening. Bye.